Okay, good evening everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up so that we can start the discussion? Done. Let's start. So, yesterday, what we have done? Yesterday, we started with concept of inflation. That is somewhere in between. We started with inflation, and in inflation, what we have discussed yesterday, we discussed a certain important concepts. That is, we discussed the idea of inflation tax. We discussed stagflation. We discussed what is this skewflation, right, etc., etc. Certain important concepts we have discussed. Then we discussed idea of a Phillips curve, correct? The idea of a Phillips curve, right? What is the Phillips curve? It basically is the representation where it provides an inverse relation. Inverse. Please remember inverse. Inverse means opposite. There is an inverse relation between the inflation rate as well as unemployment rate. Whenever the inflation rate is higher, unemployment rate is lower, and whenever inflation rate is lower, unemployment rate is higher. That kind of an inverse relationship is represented in Phillips curve. But again, we had a discussion, is it applicable always? Is this inverse relation applicable always? Not necessarily, because there is also a situation in the economy by the name of stagflation. Stagflation basically is a combination of two terms, stagnant plus inflation. In case of stagflation, generally what happens? The economy experiences a slowdown or let's say a stagnant growth. GDP doesn't grow. But in addition to that, inflation rate is very high. Is it okay? Inflation rate is very high and unemployment rate is also very high. So it is an exception. It is an exception to the concept of the Phillips curve. That is the basic idea of a stagflation. Then we discuss the concept of a base year. Correct? We discuss the idea of a base year. Right? Why do we require a base year? So that over a period of time, whatever is the impact of inflation on the GDP, I repeat, whatever is the impact of inflation on the GDP, that impact will be removed so that the comparison becomes a better, comparison becomes fair. That's a reason we choose a base year. I said generally the convention has been that once every 5 years we choose a base year. But in recent times what has happened because of pandemic very recently, or because of the 2008 global financial crisis, etc., because of all of that, the government has not been able to change the base year. There is no discussion at the government level to change the base year. Even today for GDP, we use the base year for 2000 of 2011 and 12. After that, we started with the concept of taxation. What's a tax? Tax is a compulsory charge or a compulsory levy that is imposed by the government on the taxpayers. The taxpayer in this context can be an individual such as you and me. The taxpayer could be a company. The taxpayer could be, right, let's say an investor. Taxpayer could be, right, a foreign investor, etc. So whenever government will impose and collect, that is called as a tax. Why does government impose the tax and collect the taxes? For a very simple reason. Government wants to achieve certain objective. Government wants to spend money for construction of roads. Government wants to spend money for providing welfare to poor people. Government wants to provide housing for the poor people. Government wants to construct, let's say, national highways. So for various purposes, government would require money, and for that particular reason, government will collect taxes. Next, we discussed different types of taxation systems. Different types of taxation systems. First one was a direct and indirect. If you remember very carefully, whenever the burden of taxation cannot be transferred, we call it as a direct tax. Example, wealth tax. Example, income tax, corporate tax, etc. Whenever the burden of taxation can be transferred, that is basically an indirect taxation. Best example for this is GST, which we will discuss today. Please don't worry. Today we'll have a detailed discussion about goods and services tax. Then we discussed a concept of progressive, regressive, and proportional taxation. Progressive means as the incomes will increase, the taxes paid will also start increasing. That is a progressive. Regressive is exactly opposite. And proportional, irrespective of the income, the tax rate will remain constant, will remain same for all the taxpayer. That is called as proportional taxation. After that, we discussed cesses and surcharges. Cess and surcharge. What is a cess and surcharge? It is an additional tax. It is a type of tax that is imposed by the government and collected by the government. The only difference is in case of cess, the government will impose and collect the tax with a specific objective to be achieved. For example, government would impose and collect such a tax in order to provide or promote education, to promote Swachh Bharat Abhiyan, to promote healthcare, etc. So, for a specific objective, cesses are imposed and collected. On the other side, surcharges are imposed and collected in order to ensure that income inequality that is existing will be further reduced. Surcharges are imposed and collected in addition to the existing taxes that the taxpayer is supposed to pay. Next, we discuss the concept of countervailing, right? I hope you remember this. Countervailing, anti-dumping, and safeguard duties. Anti-dumping, whenever the exporter, I repeat, whenever the exporter, that is somebody outside India, will export the product to India at lower prices, purposely at lower prices, it is called as a dumping. And in order to address this issue of a dumping activity, Government of India will impose additional taxes, which is called as anti-dumping. Right? Next one is a countervailing. Let's say an exporter that is outside India is receiving subsidies from the government. And because the exporter is receiving subsidies from the government, obviously they will be able to export the product to India at lower prices. That will obviously have a larger impact in terms of domestic players in India. So in order to address that, government will impose additional duties on the imported products which are getting subsidies in foreign countries. That is called as countervailing duty. And finally, the concept of the safeguard duty. The exporters' products are much more competitive, and as a result of that, the imports into India will suddenly increase. The imports into India will suddenly start increasing. Now that will harm the domestic manufacturers. In order to protect domestic manufacturers, government will impose a tax that is called as safeguard duties. Okay, now let me go ahead. Let me go ahead. Let's discuss certain types of direct taxes, indirect taxes, what has the government of India done, etc. First one is income taxes. The first one is income taxes. Now, what is this income tax? Please understand this. Government of India earlier had passed an income tax act in 1880. Is it okay? I'll repeat the statement here. Earlier, Government of India had imposed the income taxes, which is a type of direct tax, back in the year 1880 with introduction of Income Tax Act. But over a period of time, the Income Tax Act has been changed, and the current income tax, which is applicable, was passed by the government in 1961. Is it okay? Right. So the current act, which is applicable in case of India, is the Income Tax Act of 1961. Point number one. Now, point number two. Whenever you talk about income tax, please understand you and me, that is individuals who are earning income, we will pay income taxes to government. All of you agree? We will pay income taxes to government. And in case of companies, that is corporates, even the corporates are earning income. All of you agree with me? Even corporates, that is companies, are earning income. Companies are earning income in the form of what? Profits. So Government of India will impose income taxes on individuals and collect, that is called as individual income taxes. Government of India will also impose a tax on companies and collect the tax that is called as corporate taxes. In case of individuals, on the income it will be imposed. In case of companies, the taxes will be imposed on the profits of the companies. But whether you are talking about individuals or companies, please understand, if I'm earning, I'll take a very simple example here. If I'm earning, let's say 15 lakh rupees. If I'm earning 15 lakh rupees, will the tax be imposed on the full income of 15 lakh rupees? Is the logic okay? I'll repeat the statement by the way again. Listen to me very carefully. If I'm earning an annual salary of 15 lakh rupees, will the tax be imposed and collected on all the 15 lakh rupees? Answer is no. Answer is no. Some of you are saying yes. Answer is no. Why? I'll tell you. There is a concept of tax deductions. There is this idea of a tax deduction, tax exemption. There is a tax exemption, tax deduction, etc. What do you mean by exemption? Whether this source of income, will it be considered for calculation of income taxes or not? Exemption means, should this income be considered in calculation of income tax or not? For example, what if I were to say, if this 15 lakh rupees is through agriculture sources, let me know. If this 15 lakh rupee that I'm earning in this year, if all of this 15 lakh rupee is from agriculture sources, do you think government of India will impose taxes and collect taxes on this 15 lakh rupees? No. Why? Whatever is the income earned, I repeat, whatever is the income earned from the agriculture sources, 100% it is exempted. 100% is exempted. You do not have to pay any rupee out of that in the form of income taxes to government of India. So all of you okay? So exemptions will be considered. What about deductions? For example, you have invested in, let's say, PPF. All of you heard of PPF? Very recent, it was there in the newspaper, by the way. PPF basically stands for Public Provident Fund. PPF is one type of instrument. It's a type of investment vehicle that is available to all of us. Right? What if you have taken part of your salary and repaid a housing loan? What if you have repaid a housing loan? Don't you think certain amount that you have invested, you have paid in the market, some of this amount should not attract income taxes? And if you ask me, sir, why should this not attract income taxes? Government wants you people to take housing loans. Take in the sense, people should take housing loans, demand for the goods and services will be there. You should invest in PPF. Government wants all of you to do this. So that is the reason some of these types of investments, I repeat, some of these types of investments that you do, government will allow you to, right, claim deduction from this. Now you'll ask me, sir, what do you mean by deduction here? Let me give a very simple example. Let's say out of 15 lakh rupees, I'll start now. Listen to me carefully. Again, do not worry about calculations. UPSC is not going to ask you calculations. Listen to me carefully. Out of 15 lakh rupees, let's say 5 lakh rupees is agriculture income. Right? 5 lakh rupees is agriculture income, which means out of this 15 lakh, I will straightforward exempt 5 lakh rupees, which will not attract any kind of income taxes. So, which will reduce this number to 10 lakh rupees. All of you okay? Again, follow the discussion. Do not worry about calculation. So, 10 lakh rupees, it will come down to 10 lakh rupees. Out of this, let's say, you have invested 1 lakh rupees. You have invested 1 lakh rupees in your public provident fund account. Right? You have opened a PPF account, you have contributed to PPF account. So government of India will further say, from this 10 lakh rupee, I will allow you to claim a deduction. I will allow you to claim a deduction of 1 lakh rupee. Hence, assuming this is the only investment, hence your taxable income will become 9 lakh rupees. Your taxable income will become 9 lakh rupees. So on this 9 lakh, Government will impose income taxes and collect income taxes from you. This is how generally income tax calculation is done. Again, do not worry about these calculation. If you have not understood, please leave it. Do not worry about it. Leave it. UPSC is never going to ask you, show me how calculation is done. What is the point that you need to carry forward? What is the point you need to carry forward? Very simple. Whatever is your income, government doesn't impose income taxes on all of your income. No, government will allow you to claim deductions. Government will allow you to claim exemptions. And after that, whatever is your taxable salary, whatever is your taxable income, on this government of India will impose and collect income taxes. Now, this is basically how income taxes are calculated or basically adjusted, and the taxes are collected from the government. So, income tax, there are two types here, one for companies and the other one for individuals. One for the companies and the other one for individuals. For individual income taxes, right now, please remember again, not relevant for UPSC. If you are doing a chartered accountant, maybe that is where it is actually required. There are two systems right now. There are two systems for paying income taxes. You will have to choose one of them. And in both of them, what is the basic difference? In one of the system, the government will allow you to claim deductions, right? Government will allow you to claim deductions so that accordingly, the taxes that you're paying to government will come down. In another system, there are no deductions allowed. No deductions can be claimed, and there is a different way to calculate income taxes. Now, should you by heart what are the income tax rate under each one of them? Absolutely not required. You do not waste your time. Basic argument is individuals, right, will have to pay income tax based on the taxable income, taxable salary that they have. Now, second one is corporate taxes. Second one is corporate taxes. Until very recently, please understand this carefully now. Until very recently, in the context of corporate taxes, there was only one corporate tax rate, that is 30%. Is it okay? I'll repeat the statement here. Until very recently, that is a couple of years ago, there was only one rate of corporate tax, that is 30%. But understand this carefully. When companies are paying 30% corporate taxes, some of the companies would pay 30% and some other companies would claim lot of deductions, lot of exemptions, and they would end up paying very less rate of taxation. Is it okay? Right? There are certain companies which do not claim any deductions, which do not claim any exemption. They will pay 30% corporate taxes. But there are also some other companies, they will pay the taxes, but they will claim huge amount of deduction. They will claim huge amount of exemption. That is the precise reason what government of India has done now. Listen to me very carefully. There are two rates of corporate taxes. One is 30% rate of corporate taxation. Another one is 22% rate of corporate taxes. Is it okay? One is 30% rate. Another one is 22%. Sir, why there are two rates here? Simple logic that the government of India says is, if you pay 30% corporate taxes, you will be allowed to claim certain deductions while paying income taxes. You will be allowed to claim certain deductions while paying taxes. But if you do not have any kind of deductions to claim, you do not want to claim any deductions in case of payment of taxes, then you can pay at a lower rate of corporate tax, that is basically 22%. That is somewhere around 22%. But again, having said so, I'll add one more point here. Whenever you say 30% or 22%, along with this 30% and 22%, there will be cesses and surcharges. There will be cesses and surcharges. In case of both of them, there will be cesses and surcharges. Please remember that. Why I'm talking about all of this? I'm saying 30% corporate tax rate. Suddenly in one of the book, or let's say in the magazine or in the newspaper, they will say corporate tax rate is around 33%. Many of you will simply say, how come? The faculty says 30, the newspaper says 33.17%. Why there is so much of difference? My dear, because in addition to 30%, there is cesses and surcharges. I am writing 22% here. In addition to cesses and surcharges, it will come somewhere around 25%. In some books or in some magazine, they will say 25% is the corporate tax rate. Right? You will basically say faculty is wrong, the magazine is correct. Both of us are correct. I am saying only 22. The magazine says 22% plus cesses and surcharges, which will take it up somewhere around 25.2%. So I hope you understand there are different rates. Now you do not by heart everything. Please do not waste your time. I hope you understand my point. Do not try to become a chartered accountant in this case. Do not try to become a chartered accountant in this case. Taxation calculation is not easy. Those who are from CA, those who have done MCOM, right, they will agree with me. All of these calculations are not easy. For GS paper 3, all these calculations are never required. Right? That is the reason, keep it simple. Keep it simple. Right? For example, many of you are asking, tell me, what are the deductions claimed by companies? Then my dear, you will have to understand sections under Companies Act. You will have to understand what are the sections under the Companies Act. What are the sections under Income Tax Act? Do you think all of that is needed for UPC exam? Right? Absolutely no. That is a reason. That's a reason. Do not worry about it. Logic is very simple. You have certain deductions to claim. Then you can file the income taxes, that is corporate taxes, at 30%. If you do not have any deductions to claim, then you can pay at 22% corporate tax rate. In addition to both of them, in addition to 30% and 22%, there is one more corporate tax rate, 15%. Right? Imagine the complexity now. In addition to 30 and 22, there is one more corporate tax rate, 15%. Now, what is this 15%? Why there is this addition of, right, one more type of corporate tax rate of 15%? 15%, 15% is applicable only for those companies which will start manufacturing in this financial year. Can you understand my statement? I'll repeat the statement by the way. 15% corporate tax rate is applicable for only those new companies which have started manufacturing in this year. Right? Those who start manufacturing this year can avail a lower corporate tax rate of 15%. And many of you will ask me, why? Why is Government of India giving 15% corporate tax rate? In order to promote manufacturing activity in India, in order to promote more and more companies to be set up and start manufacturing in case of India. That is the precise reason that 15% extra one rate, 15% corporate tax rate is applicable only for the newly set up companies which will start manufacturing in this year. Right? That is financial year. Those who are asking this year means what? Financial year. Always talk in terms of financial year. Okay. So this is basically the argument of corporate taxes. Now let me give you a critical evaluation here. Let me give a critical evaluation. Government of India earlier had a single rate of taxation, single rate of corporate tax, that is 30%. It reduced it to 22%. So what is the advantage here? What is the concern? What is the disadvantage, etc.? Let's do the critical evaluation. Point number one, you please tell me, if corporate tax rate will be reduced from 30% to 22%, will it promote investments in India? Let me know. Will it not promote investments in India? Because if you're a foreign investor, you look at Indian economy now, Government of India is giving an option. Don't claim any deduction. You can pay corporate tax rate only at 22%. So don't you think Indian economy will become more attractive for investments? Point number two, with lower corporate tax rate, earlier, Government of India had one of the highest corporate tax rates in the global market. Many other countries, example USA had reduced their corporate tax rate. And there was a demand from the Indian market as well. When many countries can reduce their corporate tax rate, why is government of India not reducing it? So in order to address this particular demand from the investor side or from the business side, government of India was forced or took a choice of reducing the corporate tax rate from 30% to 22%. Third, it will promote ease of doing business also. If you reduce corporate tax rates, don't you think that will make it easier to conduct business in India? You'll come across this particular term very often. Ease of doing business. I'll give simple examples. Let me know whether all of this will promote ease of doing business. There is a process called as single window clearance. There is a process called as single window clearance. Again, all these that I'm going to tell you now are examples of promoting ease of doing business. Single window clearance. What do you mean by single window clearance? Imagine you want to start a manufacturing unit in India. You are supposed to take licenses from 5 departments of central government and 3 departments of state government. Rather than running from one department to the next, one ministry to the next, what if I say now government of India will introduce a system where you can apply for all the licenses only with one authority? Think of it. Rather than going for 5 departments individually and another 3 departments at the state level, what if I say only one authority is there and you can apply for all the licenses from this authority itself? Will it promote ease of doing business? All of you will agree? I'll give you one more example. There are labor laws. There are a lot of labor laws in India. Central government very recently clubbed many of these labor laws, more than 30 labor laws. Labor laws means acts. More than 30 labor laws have been clubbed by the government of India, and government of India has proposed only 4 laws. Rather than having more than 30, government of India now says we will have only 4 labor laws. Will this promote ease of doing business? Think of it. Will this promote ease of doing business? Of course, yes. Right. So I hope you understand the logic behind it. In fact, I'll give you one more example. The next concept that we are going to discuss is GST, Goods and Services Tax. GST is Goods and Services Tax. What is the speciality about GST? Before GST, there were multiple indirect taxes at the central government level, and there are multiple indirect taxes at the state government level. Now, what we have done under GST? We have taken most of these indirect taxes, clubbed all of them into only one tax. All of you are able to understand this statement? I'll repeat it again. The speciality about GST is what? Earlier, there are multiple indirect taxes at the central government level and also at the state government level. But what we have done is we have taken most of these indirect taxes, clubbed all of them into one tax. Now, don't you think if you remove multiple indirect taxes, club them into only one tax, that will make it easier to conduct business in India? So I hope you understand. Here itself, we have discussed multiple reforms that have been undertaken by the government to promote ease of doing business. Right? So even reduction in the corporate tax rate will promote ease of doing business in India. So first, it will attract a lot of investment. Second, promotes ease of doing business. Third, it was a demand from companies in India because many other countries were also reducing their corporate tax rate. And fourth one, if corporate tax rates are reduced, can I say companies will have more profits with themselves compared to earlier situation? Let me know. If corporate tax rate is reduced, don't you think companies will have more profits with themselves now? Because they will pay lesser corporate taxes to government of India. And when companies will have more profits, can we expect companies to invest money create employment, increase the production, thereby promoting a virtuous cycle in the economy. All of you okay with this? Right? How? Those who are asking, how, sir, how is that possible, etc., understand this carefully. Imagine a company will earn a profit of 100 crore. Earlier, what was the corporate tax rate? 30%. Now, what is the corporate tax rate? 22%. Can I simply say earlier, after paying the taxes, the company would have 70 crore rupees after payment of the taxes. Now, company after paying taxes will have not 70, rather it will have 78 crore rupees. All of you are okay with this? Which means companies are going to have more money, which the government expects the companies will invest, create employment, increase production, etc., etc. So government expected a virtuous cycle to take place because of this reduction in the corporate taxes. But having said so, what are the issues or concerns? What are issues or concerns? Point number one, straightforward, please tell me, rather than collecting taxes at 30%, if you collect at 22%, will you lose tax revenues? Let me know. Rather than collecting at 30, if you collect it at 22, will you lose tax revenues? Of course, yes. And very recently, in fact, this Friday, I will give you this article. This was published by RBI very recently. RBI data says that as a result of this reduction, Government of India has lost more than 1 lakh crore worth of tax revenues. Government of India has lost means not collected, more than 1 lakh crore worth of tax revenues. That is a concern. Second concern, you want the investments to increase in Indian economy, but the investments are also influenced by many other parameters, not just the tax rate. If a company wants to invest more money, if a foreign investor wants to invest in India, apart from the taxation, they will also be concerned about many other parameters. For example, what about skilled labor availability in India? Think of it. What if land acquisition is very difficult in India? What if it is very difficult to get licenses or approvals from the government? So, don't you think, apart from the taxation, it's a very good reform. Apart from taxation, there is a need for the government to address other issues as well. The best example of a problem for Indian economy is skilled labor availability. Remember this, skilled labor availability in India is very low, very low. In many countries, skilled labor availability is more than 70% of working population, more than 90% of working population. In case of India, it is somewhere around 12% of working population, which means one of the biggest constraint will be skilled labor availability. So if government of India, in fact, wants to promote more and more investments, apart from this, government also has to implement many other reforms. And finally, what about other policies of the government? What about the other policy of the government? Can I give you one example? Let me know. Although controversial, you don't worry about all of it. But you tell me, very recently, Government of India proposed to ban import of PCs and laptops. Correct? Let me know. Have you come across this in the newspaper? Very recently, by the way. Government of India came out with a policy where they said if you want to import it, you will have to take a license. Not complete ban. If you want to import it, please take a license. Now, please tell me, if these kind of policies are implemented, don't you think foreign investors will be concerned about investing in India? Correct? Think of it. If these kind of policies are undertaken, don't you think foreign investors will be concerned about investing in India? Why? Suddenly, these kind of policies are abruptly taken by the government. Abruptly taken by the government, which means foreign investors are concerned. Next will be what policy? After this, what kind of policy will the government of India impose, etc.? But again, based on only this, don't say this policy is very bad. I'm talking about only one viewpoint. Always there are two angles. Any policy of government of India, there are two viewpoints. I'm only speaking from the viewpoint of foreign investors. Foreign investors generally do not like this kind of extreme policies where governments, for that matter, any country, where governments will start imposing lot of restrictions like this. They want free market. They do not want restrictions in the market like this. Right? So these are some of the concerns or issues associated with reduction in the corporate taxes. But I'll go one step forward here. RBI report says government of India reduced the corporate tax rate and expected private sector to invest. Government of India expected that with reduction of corporate taxes, there will be promotion of competition in India. Right? There will be more investments in India. Has it actually happened? Has it actually happened? RBI report says no, it has not actually happened in India. Why? Let me tell you the background to this. The reduction of the corporate tax rate was done in 2019. Okay? It was done in 2019. Please tell me what happened in 2020. Let me know. This reduction was done in 2019. What do you think happened in 2020? COVID. And during COVID, you tell me, what do you think? Private sector investment went up or went down? And what do you think happened during pandemic from the private sector investments? Private sector investment took a hit. So there is the point for you. Second point is demand in 2021, etc. The demand for goods and services was low. And when the demand for goods and services is lower, private sector doesn't invest. Private sector doesn't invest. Third point, RBI report says that private sector took this extra profits. Extra means, if you remember the number earlier, right, that is at 30%, they would have paid 30 crore rupee. At 22%, they will pay 22 crore. So can I say, based on this number, can I say the company has extra 8 crore profits when it will pay 22% corporate tax rate? Basic logic. Compared to 30%, when they will pay 22%, this company will have extra 8 crore profit. Right? So I hope you understand. RBI report says the companies actually used these profits to repay the loans that they had. Rather than investing money, they used, right? They used these they used these profits, right, for repayment of the loan rather than investing money in the market. So all these are, right, all these are some of the things that have been a concern, that have been an issue regarding the recent reduction in the corporate tax rate that has been done by government of India. Okay, now let me go forward. Next type of a direct tax, capital gains tax. Very, very important, by the way. Capital gains tax. Now, what is this? Capital gains tax. Why this is called as a capital gains, etc. Let me explain. Point number one. All of us will own certain assets, right? What do you mean by asset? Asset means anything that will get returns to us. Anything that will bring returns to us is called as asset. All of you okay with this? For example, many of you will ask me, sir, any example of an asset? Can I say land is an asset? Correct? Land is an asset. What about gold? If you have gold, is it an asset for you? Of course, yes. What about, let's say, paintings? What about paintings? For example, imagine you have Mona Lisa painting. Let me know. Imagine you have Mona Lisa painting, right? So is it not an asset? Of course, yes, it is an asset, right? What about having homes? Imagine you have purchased 4 to 5 homes. Are these assets for you? Of course, yes. What about bonds? Yesterday, did we discuss a term bond? Let me know. Yesterday, did we discuss the term bond? Bonds, shares have not discussed, right? But bonds I've discussed yesterday. So all these are nothing but assets. So can I say you will purchase asset and later you will sell assets? You will purchase asset and you will sell the asset. What if you purchase the asset at 1 crore rupee? If you purchase the asset at 1 crore and you will sell the asset at 2 crore rupee, can I say you have earned a profit of 1 crore rupee? Anybody has a problem with this? Again, I'm simplifying this. I'm simplifying it. You have purchased an asset at 1 crore, you will sell it at 2 crore rupees. Are you not earning a profit of 1 crore rupee? Now, I'm using the term profit. Government will use the term capital gains. Government will use the term capital gains. Why they're using the term capital gains? You tell me, are assets part of the capital? Think of it. Are assets not the part of capital? Of course, yes, they're part of capital. Right? So when you will purchase right asset and sell it at a higher price, of course, at a higher price, right? Government will say you have made certain capital gains. But before I go forward, I know many of you are from technically from commerce, etc. background. Is the capital gains in this example exactly 1 crore rupees? No. Capital gains will not be exactly 1 crore. Capital gains will be less than 1 crore. I will tell you why. Capital gains will not be exactly 1 crore. It will be less than 1 crore rupee. Why? Many of you ask me why. Why is that less than 1 crore rupee? My dear, because from this year to this year, let's say you purchase the asset in 2020, you will sell the asset in 2023. Don't you think there will be inflation in the market? Let me know. Right, between 2020 and 2023, will there be inflation in the market? Of course, yes, there will be inflation, which means the asset value that you paid 1 crore rupee, that asset value will not be 1 crore rupee in 2023, it will be slightly more than 1 crore rupee. Right, let's say hypothetically 1.1 crore rupees or 1.2 crore rupees, which means after adjusting for inflation, I repeat, after adjusting for inflation, this value will not be 1 crore, it will, let's say, be 1.15 crore rupees. Now have a look at this. After adjusting for inflation, it is 1.15 crore and you sold it at 2 crore rupees. Then what is your capital gains? Capital gains will be 85 lakh rupees. All of you okay with this? Capital gains will be 85 lakh rupees in this example. Now how they will adjust it? Which indicator they will take it? Is it the same for all the assets, etc.? You do not worry. But all of you, please do let me know. All of you are okay with the idea of a capital gains? All of you are okay with the term capital gains. I'm focused more about capital gains term. Right? Do not worry about calculations. Most of you are running behind calculations. I don't know what is the reason. I don't know. Whatever reason you have, don't worry about calculations. Those are asking how come it is 85 lakh, etc., etc. I'm saying you'll purchase an asset at 1 crore rupee in 2020. You will sell the asset in 2023. But between 20 and 23, there is inflation. All of you will agree there is inflation, which means whatever the price that you paid in 20 will not be the same after adjusting for inflation. That is the reason we will adjust it. We will adjust it. I'm using the term adjust. Technically, they will call this as indexation. They will refer to this as indexation of the value of the asset. So they will index the value of the asset because there is inflation between 3 years. Right, automatically, because there is inflation, value will not be 1 crore, it will be more than 1 crore rupee. And that is the precise reason I said, right, to be very precise, the capital gains is not 1 crore here, it will be difference between 1.15 and 2 crore, that is 85 lakh rupees. Again, do not worry about calculation, right? Do not by heart the calculation, it is of no consequence for UPSC. Now point number two, can I say assets can be fixed assets as well as movable assets? Let me know. Assets can be fixed assets as well as movable assets, or you can simply say movable asset as well as immovable asset. For example, land. Land is an asset. Can you move the land? House. House is an asset. Can you move the house? No. These are fixed assets. On the other side, what about gold? Let me know. What about gold? Gold can be moved. What about paintings? Paintings are movable. What about securities such as shares and bonds? They can be right moved. So the assets further can be classified as a movable asset as well as immovable asset. Right? Remember that also. Point number three. Point number three. Whenever you talk about capital gains tax, whenever you talk about capital gains tax, what do you mean by capital gains tax? Here in this example, what is the capital gains? In this example, what is the capital gains? 85 lakh rupees is the capital gains. Government will impose a tax on this 85 lakh rupees and collect the tax. Hence, this is called as capital gains tax. All of you okay with this? I'll repeat it again. In this example, how much is the capital gains? 85 lakh rupees is the capital gains. So government will impose a tax on the capital gains and collect it from the taxpayer. Hence, this is called as a capital gains tax. Now going to the fourth point here, whenever you talk about capital gains tax, when it was actually introduced, we introduced two forms of capital gains tax. One was short-term capital gains tax. One was short-term capital gains tax. Second one was long-term capital gains tax. One was short-term, second one was long-term. And initially, the basic idea was that you purchase an asset, own it. I repeat, you purchase an asset, own it for 3 years and sell it after 3 years. Long-term capital gains tax will be applicable. I'll repeat the statement. You purchase an asset, you own the asset for 3 years and sell it after 3 years, long-term capital gains tax would be applicable. On the other side, you purchase the asset and sell it before 3 years, short-term capital gains tax is applicable. Anybody has a problem with this? Please do let me know. Simplify it. Anybody has a problem with this? Right, sir? What do you mean by that? I'll give a very simple example. You purchased land in 2020. You purchased land in 2020. Let's say you will sell the land in 2022. Please tell me, for how many years did you own the land? For how many years in this example did you own the land? Can I say 2 years? Right? Can I say 2 years? They will also use the term ownership or holding period. They will also use one more term, ownership or holding period. So can I say in this example, holding period is 2 years. On the other side, imagine you purchase land in 2020 and you will sell it in 2025. You will sell it in 2025. Can I say ownership period, holding period is 5 years? This is a basic idea. So earlier, when the capital gains tax was actually implemented, we differentiated between short term and long term based on only one parameter, that is 3 years. You purchase an asset for less than 3 years and sell it, short term was applicable. If you purchase an asset and sell it after 3 years, long term capital gains tax was applicable. Initially, this was the situation. But over a period of time, what government of India has done, they have changed the parameters. They have basically changed the parameters. It is very complicated now. What do you mean by complicated? For example, you purchase a share. Have you heard of share? Anybody in the classroom who says, sir, what is the term share? I've never heard of it. Then I will ask you, my dear, have you not heard even about Adani issue? Let me know. Right? Have you not even heard about Adani issue? What is happening in Adani group of companies, etc., etc. So earlier, it was basically 3 years. Now, look at the complication. For shares, Government of India reduced the ownership period to 1 year. That is, you purchase a share and sell it within 1 year, short term. You purchase the share, sell it after 1 year, they called it as a long term. For land, they changed it to 2 years. They changed this to 2 years. Holding period was made 2 years. You purchase the land, sell it within 2 years, short term. You purchase the land, sell it after 2 years, they will call this as a long term. Now, all of this is difficult to remember. That's the reason I'm saying don't remember everything. But very simple question to you people. Look at all the things that I've told you just now. With making so many changes, don't you think the whole system has become very complicated? Let me know. I'll repeat the statement. With so many changes being introduced by the government, don't you think the whole system of capital gains tax has become very complicated over a period of time? And that is the precise reason there is a lot of debate. There's a lot of debate surrounding whether should government of India restructure the whole capital gains taxation. Is it okay? I'll repeat the statement. Because this is so complicated, there is a lot of discussion surrounding whether should government of India restructure the whole capital gains taxation structure. Why? Because this is very complicated now. Many assets have been included. For many assets, holding period has been reduced. For many, it has been kept the same. For many, it has been changed over a period of time. Very complicated structure right now. But this is basically the concept of long-term, short-term capital gains tax. Anybody has a problem? Can we go forward? Can we go forward? Let me know. Can we go forward here? Okay. Why is there a division of a short term and long term? My dear, in that case, how will you impose taxes? You tell me. Don't you think there should be a different rate of taxation based on for how many years you are going to hold the asset? That is a precise reason government has a distinction of short term, long term, etc. like this. Okay. Next, tax avoidance and tax evasion. Tax avoidance and tax evasion. Understand this very carefully. Most of you will believe both are one and the same. No, both are not one and the same. Very fine line of distinction is present between both of them. Let me start with a very simple example. Example 1, example 2. In case of example 1, let's say I'm earning an income of 10 crore rupee this year. I'm earning an income of 10 crore rupee. But when I'm paying income taxes to government of India, I repeat, when I'm paying income taxes to government of India, I will declare to government of India that my income is just 1 crore rupee, and on this income, I'll pay income taxes to government. Right? Please tell me. Point number 1. Do you think this process is legal? Let me know. Do you think it is perfectly legal to not report your income to government of India? Those who are saying yes, my dear, you are wrong. You're not supposed to do this. You are supposed to report what is your income correctly to government of India. Why? Don't you think by underreporting your income, you have generated 9 crore rupee black money in Indian economy? Let me know. By not reporting your income correctly to government of India, have you not generated black money worth 9 crore rupee here? Do you think it is legal to generate black money then? Let me know. It is perfectly legal to generate black money? Government promotes you to generate black money? No. Right? So this is one example. This is one example. Remember it. I'll start explaining later. Just understand the example first. Second example. Second example. This is a second example, by the way. What happens in second example? Right? Please listen carefully. Situation 1, country 1 and country 2. I'll call this as C1 and C2, and this is the border. Okay, C1 and C2, this is the border. White line, vertical line is a border. Listen carefully first. Imagine I'm a manufacturer of a product. Okay, I'm manufacturing this bottle in country 1 where the corporate tax rate is 30%. I will manufacture it at 1000 rupee and I will sell the bottle at 5000 rupee in the country 2. Simple question. How much is the profit that I am generating in situation 1? Tell me. I'll repeat the process here again. I'm manufacturing the bottle at 1000 rupee. I will sell the bottle in another country at 5000 rupee. So how much is the profit I'm generating? 4000 rupee. All of you will agree? 4000 rupee. Now, because I'm registered in the country 1, I will have to pay corporate taxes to country 1. So, can I say 4000 rupee profit? On this, 30% tax I will pay, which means in situation 1, I'll pay taxes to country 1. How much is the tax? 1200 rupees. Let me know. Anybody finds these calculations difficult? Anybody is basically unable to follow example 1 here? That is in this case. Situation 1. Can I go forward now? That is in a nutshell. To sum up, in country 1, I am there. In country 1, I am there. I have earned a profit of 4000 rupee. I will pay 30% taxes. If you find calculations difficult, to take out the calculator, start doing it. 4000 rupee, 30% of it. That will be 1200 rupee. So which government will get this 1200 rupee corporate taxes? The first government will get the 1200 rupee taxes. Can I go forward now? Second example. Second example. I'm still manufacturing the bottle. I'm still manufacturing the bottle. Those who are saying, sir, why you will not pay taxes in second country? My dear, please, you tell me. If you pay taxes in the first country as well as second country, will it not be double taxation? You only tell me. Right? Don't just think of it. If you pay taxes in country 1 as well as country 2, is it not double taxation? You mean Infosys company will pay taxes in India as well as USA? Does it make sense to you? Let me know. Does it make sense to you? You mean to say Tata company will pay taxes in India as well as UK on the same product? How come? That is double taxation. No country, no company will do trade like this. Okay. Now come to the second example. Come to the second example. I'm still manufacturing this bottle at 1000 rupee. Now I will open another company in second country. Listen to me very carefully. I'll open second company, right, in second country, that is company B, which means in the second example, can I say company A as well as company B are owned by me only? Let me know. Can I say in the second example, company A and company B are owned by me only? Why? You will understand. Have patience. My dear, always have patience. And this is my concern with most of you or many of you. If you're typing, you'll not be able to listen to what I say. Whether you agree or disagree, it's a fact, by the way. If you keep on typing, you'll not be able to listen to what I say. Suddenly, I will tell you why there is tax avoidance in second example. You will say how there is a tax avoidance because you are not listening. Listen first. So company A is owned by me. I'll produce it at 1000. Company B is in the second country. I will sell it to the company B at 1200 rupees. At at 1200 rupees. Now, simple question to all of you. Please tell me, in the second example, how much is the profit earned by company A? Let me know. How much is the profit earned by company A? Profit earned by company A will become 200. Now, company B will take the product at 1200, sell it at 5000 rupees in the second country. Tell me how much is the profit generated by company B? Company B, can I say, has generated a profit of 3800. Now, right, some of you are making mistake here also, right? 1800, 2800, my dear, 3800. That simple CSAT calculation, it's 3800. Company B is present in second country. What is the tax rate in the second country? 10%. So company B will pay a tax to second country's government, that will be 380 rupees. 380. Company A is still present in the country 1, has earned a profit of 200 rupees, will pay 30% tax on 200, that will become 60 rupees. That will become 60 rupees. So now both the companies which are owned by me only collectively will pay how much taxes? 440 rupees. To both the countries collectively, both the companies which are owned by me are paying 440 rupees. Please compare this with earlier example, that is example 1. Compare that with this and tell me, have I avoided taxes? Let me know. Compare between example 1 and example 2 in this slide. Tell me, did I reduce my taxes? Did I pay lower taxes to the government? Of course, yes, some of you are saying no. My goodness. Some of you are saying no, right? I don't know how to tell you. Earlier you paid 1200, now you are paying 440 rupees. Is it not reduction in the taxes that you are paying? Of course, yes. From 1200 you are paying 440. Point number 2. Is it illegal for me to open a company in the second country? Tell me now. Is it illegal? Is it illegal for me to open a company in the second country? No, it is not illegal. It is perfectly legal. I can open one more company in the second country. It is perfectly allowed, by the way. It is perfectly allowed. Now, please compare this with this slide. Compare this with this slide. Was it legal in this slide? Was it legal for me to underreport my income? No, this was not legal. But here, is it legal for me to reduce my tax liability by opening one more company in another country? Of course, yes. In both the cases, I've reduced my tax liability. Here also, I will pay lesser taxes because I'm not paying taxes on 10 crore, I'm paying taxes on 1 crore. Here, rather than paying 1200, I'm paying only 440 rupee tax. But in both cases, taxes paid are lesser, but one is illegal, second one is legal. That is the difference between tax evasion and tax avoidance. Is it okay? That is the difference between tax evasion and tax avoidance. All of you okay with this? Anybody has a problem? Let me know. Again, those are worried about calculation, don't worry, my dear. Don't worry, I don't know. In what language I will have to tell, I don't know. Because you should not be worried about calculations. So very difficult for me to understand. In example 1 here, in example 1, you will produce this at 1000, you will sell it at 5000. How much profit you will earn? 4000. But you're present in the first country, corporate tax rate is 30%. 4000 into 30%. Tell me, 4000 into 30%, what is the number? 1200. In this case, second example, you will produce in India, company A, you will produce in India at 1000, but you will open one more company in the second country, right? And you will sell it at 1200. So this company A will sell it at 1200, how much is the profit made by company A? 200 rupees. And company B will sell it at 5000 rupees in the second country. How much is the profit made by company B? 3800. So this company A will pay 30% of 200 rupees and company B will pay 10% of 3800 rupees. That is how taxes are avoided. Right? Taxes are avoided. Right? So I hope you understand. In first case, that is in this case, tax evasion is happening. In this case, tax avoidance is happening. Tax evasion is illegal. Tax evasion is illegal. You are not supposed to do that. Tax avoidance cannot be said illegal. It's not preferable. Do you think government of India wants companies to do this? Let me know. Do you think government of India wants the companies to do this? Of course no. But is it illegal? No, it is not illegal. It is not illegal. It is perfectly legal. You cannot simply catch hold of company B owner and put him behind the bus. No, they have not violated any of the laws. Right? It's not illegal, but it is not preferable. But why do you think companies or taxpayers will go for evasion or avoidance? Why do you think they will do that? In order to pay lower taxes to government. In order to pay lower taxes to government. Right? Why? Let me ask you a very simple question. You want to pay very high taxes to government of India or very low taxes to government of India? Be honest, by the way. Be very, very honest. You want to pay highest amount of your income in the form of taxes, or what if there is an option given to you, 0 rupee tax? Is it okay? What if option is given to you, government of India says, if you don't want to pay taxes, don't pay. Right? Don't you think most of you will choose 0 rupees? So argument is simple. Everybody has to pay taxes, but some of them will avoid taxes, reduce the taxes payable. Some of them will evade taxes, reduce the taxes payable. Evasion is illegal. Avoidance is not preferable, but it is not illegal. Right? So that is basically the concept of tax avoidance. The tax burden or payment is lower because of actions taken by the taxpayer. None of these actions are illegal. None of these actions are illegal. These are perfectly legal actions. What is the issue? What is the issue with the tax avoidance? In case of tax avoidance, the issue is that, can I say, in this slide, look at this very carefully. In this slide, compared to the first example, in the second example, country 1 has lost lot of tax revenues. I'll repeat it. In this slide, the slide that is there right in front of your eyes, right? Don't you think country 1 has lost lot of tax revenues? And if it is a developing country such as India, don't you think that's a problem for Indian government? Why? Government of India collects money. One of the most important sources of income is taxes only. Right? For government of India, one of the most important sources of money is taxes. If companies will start avoiding taxes like this, government of India will end up losing lot of tax revenues. That is the reason for every government it's a concern, but it is a bigger concern for developing countries compared to developed countries. I'll repeat the statement. Right? It is a bigger problem for developing countries compared to developed countries, because the developing countries' dependence on taxes is very, very high. Okay, this is a concept of tax avoidance. Now, what has the government of India done? What has other governments done? I'll discuss a lot of current affairs here. Listen to me carefully. Now, more than 140 countries have come together. More than 140 countries have come together. They have signed an agreement called as base erosion and profit shifting. I'll explain this. Listen to me very carefully. More than 140 countries have come together. They have signed an agreement by the name of base erosion and profit shifting. What is this base erosion and profit shifting? Right? Please look at this example 2. In this slide, please look at this example 2. In the example 2, has the profits of the company got shifted from country 1 to country 2? Question, by the way, I'll repeat it again. Look at example 2. In example 2, have the profits of the company got shifted from country 1 to country 2? Of course, yes. Because in example 1, right, the company registered a profit of 4,000 rupees in country 1. But in example 2, the company has registered a profit of only 200, shifted the profit of 3,800 into the second country. So is there a shifting of the profits? Yes. And as a result of this, as a result of shifting of the profits, has the tax base of country 1 gone down? I'll repeat the statement. As a result of shifting of the profits like this, has the tax base of country 1 reduced? Has it shrunk? Has it come down? Answer is yes. Those are asking, sir, what do you mean by tax base? Those are asking me the question, what do you mean by tax base? Yesterday in the first slide in taxation, there's a term called as tax base. Tax base refers to any object on which government will impose a tax and collect the tax. Is it okay? Anything, any object on which government will impose the tax and collect the tax. So in this situation, profits have shifted from one country to another country. And as a result of this, the tax base in one of the countries has reduced, has shrunk, has come down. Hence, this is called as base erosion and profit shifting. Hence, this is referred to as base erosion, profit shifting. Done? Can we go forward? This base erosion profit shifting is very famous. The multinational companies, multinational enterprises. What do you mean by multinational enterprises? The companies which operate in multiple countries, these are called as multinational enterprises. For example, all of you will agree, Facebook is a multinational enterprise. Anybody wants to disagree with me? What about Google? What about Google? What about Amazon? What about Apple? These are very famous, by the way, for only this purpose. For this, these are very famous. Apple, Facebook, Google, Amazon, right? All these companies are multinational enterprises. And there is an allegation that all these companies, which are MNEs, are basically avoiding taxes. These are avoiding taxes. Why? They are basically abusing the taxation system. There is a mismatch in the global system. They're abusing the taxation system. And what they do is, for example, Amazon, or for that matter, let's say Apple, what they do is they will open an office in a country where tax rates are very low. Is it okay? I'll repeat the statement here. They will open the main office, that is registered office, in a country where the tax rates are very, very low. Right? Any example of a tax country where tax rates are very low? Cayman Islands. Have you heard of this? Cayman Islands, Ireland, Panama, Mauritius. Right? All these are the countries, and again, the list is very, very high. Right? There are many countries where the tax rates are very, very low, very, very low, 5%, right? 12%. Right? Many countries also have 0%. In Caribbean islands, many countries have 0% tax rate. So I hope you understand the logic behind it. Why do the companies open offices, set up offices in other countries? For what purpose? The purpose is they want to abuse the taxation system. They want to pay very less taxes. Right? So that is basically called as base erosion and profit shifting. The MNEs will exploit the gaps as well as mismatches in different countries' taxation system. And as a result of this, the tax that is collected by various countries, such as India, such as UK, USA, right? These are different country governments. They are losing lot of tax revenues. They are ending up losing billions of dollars in the form of tax revenues. And in order to address this issue, right, in order to address this particular issue, these countries, that is more than 140 countries, have come together and they have signed one agreement which is very famously referred to as Base Erosion Profit Shifting Action Plan, BEPS Action Plan. Under the BEPS Action Plan, there are 15 reforms that the countries are supposed to implement. These are very famously referred to as 15 pillars. 15 pillars means there are reforms which have been recommended under 15 areas. Each of the member countries is supposed to implement these reforms in order to address tax avoidance, right? And there are more than 140 countries which have signed and have started implementing these reforms. India is one of them. India is one of these 141 countries. Okay, so this is base erosion and profit shifting. Now let me add one more very important current affairs concept here. Very recently, many countries have come together, again associated with BPS only. Many countries have come together and they have introduced a concept by the name of global minimum corporate tax. And if you have been reading newspaper, this is very often cited in the newspaper, right? Let me prove it. Currently, there is a discussion about G20, not G20 in India, G20 in Marrakesh. Yes or no? Let me know those who are reading newspaper, at least those who are reading newspaper. By the way, when I say newspapers, how many of you have read today's Hindu newspaper? How many of you have read today's Hindu newspaper? Was there a discussion about the gender gap, right? The gender income gap, right? A very big article, right? In that particular Hindu newspaper. Very nice article, by the way. Please read that. Please read that. That is a very nice article, by the way. Okay. Now, come to the point here. Come to the point. There is this concept of global minimum corporate tax that is being discussed now. Yet to be implemented, it is being discussed. When it will be get implemented, it is expected next year. Next year, this will come into force. Now, what is this global minimum corporate tax? There are two areas, two pillars under the global minimum corporate tax. In the first pillar, understand this carefully. In the first pillar, this will be applicable for those companies which have a revenue of more than 20 billion euros. Okay, it is applicable. It is applicable for those companies, that is multinational enterprises, which have revenues of more than 20 billion euros. Now, what is this pillar, right? Why this is applicable? I'll discuss two very important concepts here. Listen to me very carefully. Imagine this is a country. Okay, let's say this is India. I know this doesn't look like India's map, but don't worry. Imagine this is India. Can I say Amazon company will come to India? Flipkart, sorry, not Flipkart, Facebook has come to India and is generating lot of revenues using customers of India. Anybody wants to disagree with me? I'll repeat it again. A company such as Amazon, Apple, Facebook, etc., they have come to India. They are using the customer base of India, but when it is supposed to pay taxes, when Amazon is supposed to pay taxes, they will pay in a country where the tax rates are very low. Right? Apple, when it is supposed to pay taxes, they will pay the taxes in a country where the tax rates are very low because they are registered in that country. Now, what to be done? How do we address it? Right? The methodology that we are trying to adopt has two very important features under pillar one. Under pillar one, please listen to me carefully now. Whatever is the revenue generated, I'll take example of a company, let's say Amazon. Whatever is the revenue generated by Amazon in India, part of the revenue will be imposed and collected by government of India in the form of taxes. All of you okay with this? I'll repeat it again. right? Part of their revenues or part of their profits, the government, from which economy, from which market they are generating this, the same government will impose and collect the money from them. Everybody is okay with pillar number one? Let me know. Everybody is okay with pillar number one. Can I go to the second pillar now? Right, for example, Amazon will generate revenues in India. Government of India will impose a certain amount of taxes on this revenue and will collect the taxes. That is called as a pillar 1 under global minimum corporate tax. Pillar 2. Pillar 2. Okay. Pillar 2 is, again, please understand, many of you are asking how much rate, etc., etc. It is not yet finalized. I hope you understand my point. It is under discussion. It is not yet finalized, right? In what way revenue will be calculated? How much of the revenue will be considered by government of India? All of that, please wait. Wait. You will come to know all of that over a period of time. It is just a proposal. India has agreed to the proposal, but how the calculation will be done, etc., you will have to wait and see how clarity will be provided. Second pillar, the multinational enterprises will have to pay a minimum corporate tax rate of 15%. Multinational enterprises, right, will have to pay a minimum corporate tax rate of 15%. How this will be enforced? Let me explain it to you. Listen, look at the example very carefully. Imagine this is USA, okay, and let's say there's a company X in the USA. Now, this company is registered in one more country where the corporate tax rate, is just, let's say, 8%. All of you will agree with this? I'll repeat it again. A company is, right, basically an American company. It started working in America, right? It's an American company. I'll call this company's name as X. Now, for the purpose of taxation, the company X is registered in another country where the corporate tax rate is 8%. Now, as per the second pillar, they are supposed to pay how much? 15% corporate tax. All of you okay? They're supposed to pay how much? 15% corporate tax rate. Now, let's say this company X will generate $100 billion profit. Again, X is just a right example. Rather than X, I'll write XYZ. Many of you are saying X is Twitter. Forget about Twitter. Focus here. Right? Let's say company XYZ. Okay. Right. So this XYZ has generated a profit of 100 billion. And out of 100 billion, they will simply calculate 8% of it. That is, they will pay 8 billion to the government of this country. But as per second pillar, how much should be the minimum corporate tax rate? Can I say as per the second pillar, the minimum corporate tax rate is 15%. So the country, right, the country, that is basically, this is called as home country. So the home country will basically impose and collect taxes to ensure that overall tax rate will become 15%. I'll repeat the statement. The home country, the government in the home country, if this company is not paying 15% anywhere, they will impose additional taxes on the profit and ensure that the company will pay overall 15%. Which means, can I do the calculation here? Here they are paying only 8%. If you want to reach 15%, can I say USA government will impose 7% corporate tax rate on $100 billion. All of you okay with this? The government of USA will impose 7% corporate tax rate on this $100 billion and collect $7 billion from the company XYZ. This is the second pillar of global minimum corporate taxation structure that has been proposed. Why? What is the advantage of all of this? Why are they doing all of this? The companies used to structure themselves in such a way that they will choose one country where the corporate tax rates are very low. Is it okay? They will try to escape from USA and pay very negligible taxes, zero taxes, or negligible taxes in another country. But now, under the global minimum corporate tax regime, they will not have option. They will not have any option. Let them be registered anywhere, right? If they are paying less than 15%, then right, the home country's government will impose additional tax, collect additional tax from them. Right? This is basically the idea. This is basically the idea. And I'll tell you why this kind of a regime is being implemented. Imagine there are two countries. Okay, imagine there are two countries, C1 and C2. If country one will reduce their corporate taxes, right? Let's say earlier it was 30%, here it was also 30%. Imagine, okay, C1 and C2 corporate tax rate is 30. What if country one will reduce their corporate taxes from 30% to 25%? Don't you think many companies will try to invest in country one? Yes or no? Many companies will try to invest in country one. Why should the country to sit quietly? They will reduce their corporate taxes from 30% to 22%. Now tell me, many companies rather than investing in country one, they will try to move to country two. There is also a third country. They will reduce their corporate taxes, let's say from 28% to 20%. They also want to attract investment. They also want to attract investment. They will reduce their corporate taxes from 28 to 20%. Now investments will start moving towards country three. Can I say this is basically a competition to the bottom? Is it okay? Can I characterize this as competition to the bottom? Bottom means what? Countries will keep on competitively reducing their taxes in order to attract more and more investment. But in the process, every country is losing tax revenues. Every country is losing tax revenue. So they call this as a competition to the bottom. Right? Basically, it's a competition to the bottom. Right? In order to address this, now we have proposed a global minimum corporate tax rate of 15%. Right? So whether you are registered in country one, country two, if you're not paying 15%, the home country will impose additional tax, collect taxes from you. Is it okay? Right. So this is one more very important reform that is being discussed in the current affairs. Be aware of it. Be aware of it. Lot of countries are discussing global minimum corporate tax rate, including India. Including India. In fact, last week in Financial Express, there was an article regarding this. I will give it on Friday. I'll give that article on Friday. You can read it. Now, come to the next reform, minimum alternate tax. Minimum alternate tax. Now, slightly technical, listen to me carefully. Right? Slightly technical, listen to me carefully. Right? What is this idea of a minimum alternate tax? Why did we implement minimum alternate tax? What is the logic behind it? Let me explain it. Right? Imagine there is a company A. Okay? Imagine there is a company A. Company A will produce certain goods. For that, they will incur expenditure. They will sell the goods in the market. They will earn a revenue. Let's say the company will earn a revenue of 1,000 crore and expenditure is 800 crore. The company will earn a revenue of 1,000, right? And expenditure is 800. The difference between both of them is called as a book profit. The difference between both of them is called as a book profit. It is like income for the company. It is basically nothing but income for the company. Now, please think and do let me know. Earlier we have discussed this. You just need to remember the point. Do you think on this 200 crore that is income of the company, do you think government of India will impose and collect taxes from all the 200 crore? Is it fair? Let me know. Right? Earlier we have discussed this. Just like 15 lakh rupee income. Just like 15 lakh rupee income. Right? Don't you think even companies will have certain deductions to claim? Companies will have certain exemptions to claim. So argument is simple. This is the book profit, income of the company. Government will not collect taxes directly on the income. Government will allow the companies to claim deductions, right? Such as depreciation, right? Did you remember the term depreciation? Let me know. Do you remember the term depreciation? So the depreciation, right, dividend, etc., lot of deductions are allowed to be claimed by the companies. Now there were, I repeat, there were certain companies earlier, if they had a book profit of 200 crore, they would simply claim deductions of 200 crore. As a result of this, the profits on which government would end up imposing corporate tax of 30%, the final profits, that is a taxable income, taxable profit, would end up becoming 0 rupees. Right? It would end up becoming 0 rupees. Such companies were referred to as zero tax companies. Such companies were referred to as zero tax companies. Remember this. Such companies were referred to as zero tax companies. Right? Why? My dear, again, I'll tell you. Right? Most of you are asking how can they claim deductions, etc., etc. As per Income Tax Act and as per the provisions of Companies Act, the companies are allowed to claim deductions. Is it okay? At least now all of you okay? As per Income Tax Act and as per Companies Act, the companies are allowed to claim deductions. Of course, they should be allowed. Many of you will ask me why they should be allowed, they should not be allowed, etc., etc. When you contribute or when you invest in PPF, you want to claim that investment as a deduction or not? Simple question to all of you. You're a taxpayer. Out of your 15 lakh rupee income, you have invested 1 lakh rupee in, let's say, public provident fund. You want to claim that deduction? Deduction simply means out of 15 lakh, you are telling government, I've invested this 1 lakh in PPF, do not impose and collect income tax even on that 1 lakh. You want to claim that deduction? In the same way, companies have spent money on purchasing a machine. Do you want the government to impose taxes on the purchasing of the machine also? Is it fair? Let me know. Does it make any sense to you? So argument is simple here. Don't enter into which provision is applicable, right? What kind of deductions are allowed, how much percentage deduction is allowed, etc., etc. Don't enter into all of it. For that, you will have to become company secretary. You want to become IAS, stick to IAS study. So argument is simple. There were companies which generated lot of income. Book profit is nothing but income. We generated lot of profits like this. But because they claimed huge amount of deduction, they will end up paying 0 rupee taxes in the form of corporate taxes to Government of India. Hence, such companies were referred to as zero tax companies. Right? If I want to give you an example, please do let me know. Have you seen the movie Guru? Let me know. Have you seen the movie Guru? Right? Again, English, I'm sorry, Hindi, Telugu, Tamil, whatever it is. Mr. Abhishek Bachchan's movie. If you have not seen, don't panic. UPSC will not ask you all of it. Please do not panic. If you have not seen the movie, perfectly all right. Nothing wrong with that. Those who have seen the movie, please tell me, don't you think that company, which was owned by Mr. Abhishek Bachchan, was doing exactly the same thing? The company will simply say, we have purchased machines. Hence, we will not pay any taxes. Right? I've purchased this. I've invested in this. I've given returns to the investors in the shareholders. I will not pay taxes. Have you seen that or not? If not, leave it. If you have seen, good. UPSC is least bothered about it. But please understand the logic behind it. Logic is simple. Companies are generating income, but because they are claiming lot of deductions, they will end up paying 0 rupee taxes to government. Hence, these were very famously referred to as zero tax companies, right? Zero tax companies. Now, government of India will not be happy with this. Government will not allow this to continue. Argument of government of India was, you are generating income, you are earning income, but you are not paying any taxes to me. I will not allow this to happen. That's the reason government introduced the concept of a minimum alternate tax. Now let me show how MAT will work. Understand, please do not by heart calculations. Many of you will try to by heart calculations. That is not required. Let me explain how MAT will work. Same company will generate a revenue of 1000 crore, will incur expenditure of 800 crore. How much is the book profit? That is income before all the deductions. How much is the income? 200 crore rupee. Now government of India says, you claim the deductions, you claim deductions, okay, but I'll calculate taxes in two different ways. One, I will calculate minimum alternate tax on this book profit. I will calculate minimum alternate tax on this book profit, and as usual I will calculate 30% corporate tax, let's say, at taxable profit. Whichever is greater, I repeat, whichever is greater, I will collect it in the form of taxes. Now you calculate and tell me which is greater. Can I say 15% of 200 crore will be 30 crore rupees? 15% of 200 crore will be 30 crore rupees, and 30% of 0 rupees will be 0. So which is greater? 30 crore is greater. Government will collect a 30 crore rupee tax from this company. Hence, this particular process of calculation of taxes is called as minimum alternate tax. All of you okay with this? Can we go forward? Can we go forward? All of you okay with this? Right? Now, many of you ask me, sir, what if it is vice versa? What if it is vice versa? That is, MAT is lesser and actual corporate tax rate is greater. Can this also happen? Of course, yes. It can also happen. Let me explain it. Imagine, right? Imagine instead of claiming a deduction of 200 crore, let's take a simple example. Imagine instead of claiming a deduction of 200 crore rupees, they will simply claim a deduction of, right, let's take an arbitrary number here, let's say 60 crore. Instead of claiming a deduction of 200 crore, imagine they'll claim a deduction of 60 crore rupees. Now, what will be taxable income? Please tell me, what will be taxable income? 140 crore rupees. What will be taxable income? 140 crore rupees. Calculate 140 crore rupees, 30% of it, that will become 40 crore, 42 crore rupees. Now, which is greater? Which is greater? Obviously, the corporate tax at 30% is greater. Government will collect this in the form of corporate taxes. All of you okay with this? Right? Is it applicable to any company in India? It is applicable to all the companies in India. I repeat, right? Which company is it applicable to? All the companies in India will come under the concept of MAT, right? Automatically, they are covered under MAT. Government of India says 15% of book profit, or right, let's say 30% of final profits. Whichever is greater, I will collect it from you in the form of minimum alternate tax. Can we go forward? Can we go forward? How can companies claim deduction of 100%? My dear, if you have purchased machines of 200 crore rupees, can you claim a depreciation of 200 crore here? Answer to my question. In this example, if you have purchased machines of 200 crore rupees, can you claim a depreciation? Depreciation is part of deductions, by the way, of 200 crore rupees. Of course, yes, you can claim it. There have been examples, multiple examples, which appeared before 1980s in India. You are allowed to do that. But this is a misuse of the provision. It is basically abusing the provision. That is the reason why in 1987, Mr. Rajiv Gandhi, who was the Prime Minister, introduced the concept of MCT, Minimum Corporate Tax. Right? And over a period of time, this particular minimum corporate tax was actually renamed in 1996 as a minimum alternate tax. And right now, minimum alternate tax applicable is 15%. It is applicable to all the companies. It is simply applicable to all the companies. Is it okay? Can we go forward? Okay. Right. Again, many of you are worried about calculation. My dear, this is, I believe, the fifth time, at least the fifth time I'm telling you in today's class itself. I could have simply told you what is MAT. I could have simply told you MAT means a minimum alternate tax where government will calculate 15% of book profits. If it is greater, they will collect it. Now, please tell me how many of you would have understood it. That is the reason I've taken examples, I've taken calculations just to make the concept clear to you. You can check the books. In the books, they will not give you calculations. Trust me when I say this. In books, they will not give you calculations. Why? UPSC will not ask you all these calculations. Okay, that's a reason. Do not worry. And those who are asking, sir, where can I get all these calculations? Chartered accountants, CA. There is right. There's a very good study material for CA. But again, please listen to me very carefully. Should you read CA study material for UPSC exams? Answer is no. Is it okay? Right? I'm teacher. I don't have any option. I will have to read multiple material. But you, should you read CA material, chartered accountant material for UPSC examination? Answer is a big no. Right? A very, very big no. You don't require such a detailed discussion for UPSC examinations. That's a reason. Okay? Right? So that's the reason I've given calculations. You do not worry. Understand the concept and go forward. Okay, let me go forward. GAR, General Anti-Avoidance Rules. Right? General Anti-Avoidance Rules. It's not arrangement, it's rules. Okay, GAR. That is the extension, that is a full form of GAR. Now, what is this GAR? Right? Let me explain. Right? Let me explain a particular concept to you. One more example. I'll show you calculations, but listen to me very carefully. After this, we'll take a break. Listen carefully. Now, later, we'll discuss a policy by the name of Special Economic Zone. Not today, later. Later, we'll discuss a policy by the name of Special Economic Zone. That is SEZ, Special Economic Zone. What is this Special Economic Zone? Imagine this is India, and this particular part of India, imagine government of India will notify this as a special economic zone. Imagine, okay? What is the use of it? Why does government declare certain region as a special economic zone? Right, understand this. Government of India says, if this area is declared as special economic zone, whatever is imported into this region, you do not have to pay any taxes on the imports. All of you are able to listen to me? I'll repeat it again. Listen carefully. This region, if it is declared as a special economic zone, Government of India says whatever is imported in this particular special economic zone, you do not have to pay any taxes on the import. What is the use then? The use is that, imagine you are manufacturing this bottle, you are in SEZ, you are manufacturing this bottle. If you import a steel, you do not have to pay any import duty. You do not have to pay any taxes on the import. Now tell me, when you import steel and you do not pay any taxes on the steel, you will manufacture the bottle and export it. That's very important. Export it to USA. Don't you think because of no taxes on the import, your product cost would be lower? Let me know. Because you're not paying any taxes on the steel that you have imported, don't you think the cost of production would be lower? You will be able to export more to USA now. That's the whole idea of SEZ. Some of you are saying no. Let me give you an example. My dear, listen carefully. Imagine the cost of steel, right? Imagine the cost of steel is certain amount, but the taxes are 20 rupees. Taxes are 20 rupees. Now, this bottle will cost you 100. If you pay tax of 20, don't you think the overall cost of the bottle will become 120? Very simple. If the taxes on the steel that you have imported is 20 rupees, if you pay it to government, what will be the cost of production of the steel? Sorry, bottle. The cost of production of the bottle will become 120. But if government says, don't pay this 20 rupee tax to me, don't pay. When you import it, don't pay it to me. Can I say now, because you're not paying this particular 20 rupees, don't you think the cost of production of the bottle will remain 100 rupee? Correct? And you can export it to the international market. You'll be able to export it to the international market. That's the whole idea of SEZ. That is the advantage of having SEZs, right? In simple terms, imports that you do not have to pay taxes on it, because whatever you produce, you will have to export it. You will have to export it to international market, right? That is the model of a special economic zone. Now, one of the very important features of special economic zone is that if you are manufacturing in the special economic zone for 5 years, I repeat, for 5 years, government will not collect any income taxes from you. Is it okay? I'll repeat it. I'll repeat it again. If you're manufacturing in the special economic zone and you're earning profit for 5 years, government will not collect any corporate taxes from your profits. 100% exemption. 100% tax exemption. Whatever profits you earn, you are within SEZ, 100% tax exemption. 0 rupee they will collect from you in the form of corporate taxes. All of you okay with this model now? Why I'm discussing all of this? Let me explain it. Let me explain it. Listen to me very carefully. Example 1. Right, focus now. Example 1. Here is special economic zone and all of this is within India. All of this is happening within India. Right? Be very careful. All of this is within India. Okay. Here is special economic zone. Company A will generate certain amount of profit. Let's say company A will generate a profit of, I'll just throw an arbitrary number, same 4,000 rupees. Right? Company A will generate a profit of 4,000 rupees. Please tell me, because the company A is present in the special economic zone, how much of this 4,000 rupee will be given to government in the form of taxes? How much of this 4,000 will be given to government of India in the form of taxes? Can I say 0 rupee? Can I say 0 rupee? On the other side, if another company is generating a profit of 4,000 rupees, that is company B is generating a profit of 4,000 rupees, but outside SEZ. Outside SEZ means what? I'll show you the picture earlier. I said, imagine this is India. Okay, imagine this is India. This is SEZ. Whatever is remaining part, I repeat, whatever is the remaining part, this is called as domestic tariff area. Any problem here? Any problem? Please do let me know. Right? Imagine this is India. If this corner part, right, the lower bottom part, if this is SEZ, outside SEZ, the remaining part of India is called as a domestic tariff area. Right? Now, what is the use of this? Let's start. If a company is present in the domestic tariff area and generates a profit of 4,000, corporate tax rate of 30% is applicable. So can I say company B will end up paying 1,200 rupees in the form of tax to government of India. So look at this. One company within SEZ, 0 rupee tax. Another company outside SEZ, they will pay 1,200 rupee tax. Don't you think there is a potential to abuse SEZ system? I'll prove how. Right? The company B will look at it and say, I will try to abuse this particular SEZ system. How? Let's start. Same bottle. Company B will manufacture the bottle at 1,000 rupee. Right? Understand this. company B will manufacture the bottle at 1000 rupee rather than exporting directly to the foreign market at 5000. If they directly export it to foreign market at 5000 rupees, how much is the profit earned by company B? 4000 rupee. Correct? I'll repeat it again. Right? I'm the owner of company B. I will manufacture the bottle at 1000. I will export it at 5000 rupees to foreign country. How much is my profit? 4000. I will not do that. Instead of directly exporting, I will open one more company within SCC. I will sell it at 1200 rupees to company A. Possible or not? Think of it. Possible or not? I'm not saying it is impossible. Is it possible? Of course, yes. I can open one more company within SCC. I will basically sell this particular product at 1200 rupees to company A. Now, from company A, I will export it to international market at 5000 rupees. Simple question to you, start answering. In the second example, how much is the profit earned by company B? How much is the profit earned by company B? Company B, my dear, right? Most of you are not listening carefully. How much is the profit earned by company B? 200 rupees. So many different numbers. Look at the numbers, no? Please look at the numbers. Company B is selling it to company A at 1200. So company B will generate a profit of 200 rupees. Okay. Now company A, which is there in the SEC, how much is the profit generated by company A? How much is the profit generated by company A? 3800. Question number 3. How much taxes will the company B pay to the government of India? How much taxes will the company B, listen carefully, company B pay to government of India? 30% of 200, that will be 60 rupees. How much taxes will be paid by company A to government of India? 0 rupees. Is it not avoidance? Let me know. Is it not avoidance of taxation? Avoidance in the sense, please tell me, why do you think company A and company B have entered into such an arrangement? Think of it. Why do you think company B is manufacturing, selling the product to company A? Company A will export it. Why do you think there is such an arrangement between company A and B? Can I say it is simply to avoid taxes? There is no commercial argument. There is no commercial benefit in this arrangement. Commercial benefit is not there. What is the benefit? Benefit is they will enter into such arrangements in order to avoid taxes. Such arrangements are called as impermissible avoidance agreement. Such arrangements are referred to as impermissible avoidance agreement. Now, if you are the tax commissioner, let me know, if you are the tax commissioner, should you allow such types of arrangements between company and company B? Let me know. Should you allow this kind of arrangement between company and company B? That arrangement is already there. Should you allow this to continue where company B is abusing the system, thereby avoiding the taxes? What government says is, whenever the tax officials will find that there are impermissible avoidance arrangements, I repeat, whenever the tax officials will find that there are impermissible avoidance arrangements, it is arrangements. And whenever there are such impermissible avoidance arrangements, whatever tax benefit is given to the company, the tax benefit will be withdrawn. Is it okay? I'll repeat the statement. Right? In such arrangements which are impermissible, that is, there is no commercial substance, this arrangement is only for the purpose of avoiding taxes. Whatever tax benefit has been given to the company, such benefit will not be given, it will be withdrawn. What is the tax benefit given to the company A here? Tell me, what is the benefit given? Benefit is, instead of imposing 30% tax on the profits earned, government is giving a benefit that is 0% tax. Correct? Instead of imposing 30% tax rate, government is giving a benefit of 0% tax rate. But if there is an abuse of the system, they are entering into arrangements to avoid the taxes. Government says, this benefit I will not give it to you. I will not give you benefit. That is, instead of imposing and collecting 0% tax from you, I will treat you like any other company, impose a 30% tax collected from you. Which means, if 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 the tax official will withdraw the benefit, the company A, which has generated a profit of 3800, the company A, which has generated a profit of 3800, even on this 3800, 30% tax will be imposed and collected. All of you will agree with this? Right? That 0% was the benefit. 0% was the benefit. I will not give you this particular tax benefit because you are entering into impermissible avoidance arrangement. Hence, I will withdraw it. I will treat you like any other company. I will collect a 30% tax from you, which is nothing but 1140. 1140. And as usual, the company, right? This is a company A. As usual, the company B has paid 60 rupee tax to the government already. So tell me, don't you think government will end up, I repeat, government will end up collecting 1200 rupee tax as it was collecting earlier? All of you okay with this? Government, by basically cancelling the benefit, by withdrawing the tax benefit that they provided earlier, right? They will withdraw it and collect as usual 30% tax and ensure that whatever is the loss of tax revenue for them, they will collect it from the companies. This is basically the concept of general anti-avoidance rules. This is the concept of general anti-avoidance rules. Why do we implement GAR here? GAR basically is implemented, it's a rule, right? Those who are asking what is GAR, it is a set of rule, right? So argument is, there are many companies which enter into arrangements in order to avoid taxes. Commercial substance is not there, but they will enter into it just to avoid taxes to the government. And the government of India says, if you are doing that, and if I come to know you are doing that, whatever tax benefit was given to you, I will withdraw it and I'll treat you like a normal company, impose a tax, collect the taxes from you. That is the concept of general anti. Can we go forward now? Can we go forward? Unable to understand how to become SEZ company? My dear, government has identified a region as SEZ. You will open company A in the region of SEZ. Possible or not? I'll repeat the statement. Government of India has identified a particular region as a special economic zone. You will go open company A in the special economic zone. Possible or not? Do let me know. Is this possible? Is this thing possible or not? Of course, yes, all of this is possible. Based on the examples only, I've given all of this. Okay. Now, don't enter into SEZ. And most of you forget about all of this, right? Or most of you run behind SEZ. Forget about it. We'll discuss SEZ separately. So, companies enter into various arrangements which lack any commercial substance and rather are made just to pay lower taxes, that is, avoid taxes. GAR will refer to a set of provisions or guidelines to check tax avoidance to identify impermissible avoidance arrangement. And whenever impermissible avoidance arrangements are identified, whatever tax benefit was given, that tax benefit will be withdrawn and the taxes will be imposed and collected by the government. Right? GAR provisions have been implemented in India under Income Tax Act of 1961. It was proposed earlier under a different law, but Direct Taxes Code. The law was Direct Taxes Code. direct taxes code has not been implemented in India. That's the reason separately, GAR has been implemented by the government. Can we go forward? Can we go forward? Are there any SCs in India? My dear, again, I'll repeat the statement. Do not worry about SCs right now. What was important for you in this context? There is a model of SCG and the tax rate applicable in SCG for 5 years is 0%. Understand only that point. So where SCG is located, can I open SCG, right? Can I see SCG? We'll discuss that later. Have patience. Okay, done. Can we go forward? Can we go forward? Next concept that I want to discuss will be goods and services tax. Okay. Now, before I go forward, let's take a break. But before break, let me address your questions. But how company B will try to disrupt SCG benefit? There is no disruption. I'm saying, Are Baba, you people are not listening to me. Listen first. Imagine I'm the owner of the company. Already I've set up a manufacturing unit outside SCG. Okay, somewhere I've set up manufacturing unit. Should I close the manufacturing unit? Don't you think that that is a loss for me? So what I will do, I will manufacture outside SCG, but I will open one more company within SCG, which will purchase it from the first company and sell it or export it to international market. Why? Why I will open a unit in SCG? Because in SCG, corporate tax rate for 5 years is 0%. Don't you want to pay lesser taxes to government of India? Let me know. Don't you want to pay lesser taxes to government of India? You're trying to do that only. This is avoidance. Okay. Why there is a need for SCG then, my dear? Answer to my question. Do you want to promote more and more exports from India or not? Very simple question to all of you. Because two students are asking me why is there a need of a special economic zone? You want to promote more and more exports to the international market or not? Can I simply say one of the ways to promote exports is by promoting model of special economic zone? Very simple argument. Right? Because the laws in SEC are very flexible. That's a reason. Okay. If deduction is more than book profit, then this is called as a book loss. Right? If the deduction is more than 200 crore, there's a student who says, if this deduction is more than 200 crore, then what will happen? Then basically it's a loss for the company. It is claimed as a loss for the company. Okay. New income tax payers don't have a choice. My dear, if you're talking about income tax regime in India, there are two options available to you. Once you choose any one of the regime, you're fixed. You cannot keep on shifting from one regime to another regime. Sir, but why both are same person's company sold in profit? Again, I don't understand the question only. Okay. Okay. Done. Let's take a break then. Let's take a break. Okay. Take a break. We'll restart the discussion at 7:18. We'll restart the discussion at 7:18. Join back at 7:18. Okay, good evening everyone. Welcome back. Am I audible? Am I audible? Can we go forward? Okay, done. Let's start. So next, so far we have discussed direct taxes. If I understand, we have discussed direct taxes. Let's discuss certain important concepts regarding indirect taxes. The most important one for your exams will be GST, Goods and Services Tax. GST, that is Goods and Services Tax. Please be very careful. The trend has been that in the prelims as well as mains on the concept of GST itself. Now, to understand the idea of a GST, you need to understand certain basic concepts. The two very important concepts that you need to master or understand it clearly is one, cascading effect, and the second one, the idea of input tax credit. We'll go one by one. Listen to me very carefully. Do not run behind calculations. Understand the concept behind it. One is called as a cascading effect. What is cascading effect? Whenever a tax is imposed on a tax, it is called as a cascading effect. I repeat, whenever a tax is imposed on a tax, it is called as a cascading effect. Let me prove it. Earlier what used to happen was, earlier central government would impose indirect taxes and the state government would also impose certain types of indirect taxes. Please remember that. Earlier, central government would impose a tax by the name of excise. Central government would impose a tax by the name of excise duties. Excise means a tax on production. All of you okay with this? A tax on production. And the state governments would impose a tax on sales, which was very famously called as sales tax. This is point number one, right? Sales tax. Point number two. Earlier, the problem was that the central government will impose and collect excise, and in addition to this, the state government would impose and collect a sales tax. And in the process of imposing and collecting these taxes, there was a cascading effect. There was a cascading effect, which is nothing but tax on tax. How? Let's start. A will manufacture a product, give it to B. B will manufacture right further and sell it to C. Let's say C is the customer. Okay. So A will sell it to B. I'll call this as step one. B will sell it to C. I'll call this as step two. Let's say A will sell the product at 100 rupees to B and the government will impose a tax of 10%. Government will impose a tax of 10%, which means, can I say, B will pay 100 plus 10 rupees. All of you okay with this? B will pay 100 plus 10 rupees, that is 110 rupees, and purchase it. Now B will use this as an input, will add a value of 20, that is labor cost, profit, etc. etc. B will add a value of 20, and now B wants to sell it to C at 130 rupees. 130 rupees. How do I get this 130 rupees? Listen carefully, see here. 130 rupees is nothing but 100 rupees this price plus 10 rupee, that is the tax, plus 20 rupee, which is nothing but the value that is added by B. 20 rupee, that is value added by B. Total will become 130. Now, what if the government will again impose a tax of 10% on 130? Basically, it will be 130 plus 10%, that is 13 rupees. It will become 130 plus 13. It will become 143 rupees. Correct? 143 rupees. That is what I've written. C will pay how much? 143 rupees. But now focus. I'll ask you a very simple question. When you calculate 10% tax on 130 rupees, can I say there is a tax imposed on a tax? Observe it and do let me know. I'll repeat the question again. When you calculate a 10% tax on 130 rupees, can I say you are imposing tax on a tax here? Right? That is, out of 130 rupees, there is already a tax of 10 rupee. So if you impose a 10% on 130, it is nothing but tax on tax. This is called as cascading effect. All of you okay with this? This is called as cascading effect. That is, a tax is imposed on a tax, hence called as a cascading effect. Now, what is the problem? If there is a cascading effect, what is the issue? Point number one, observe it and do let me know whether I am correct or not. Whenever there is a cascading effect, market price of the product will be higher. Point number one. I'll repeat it. Whenever there's a cascading effect, market price of the product will become higher. Point number two, if there's a cascading effect, it simply means the burden on the customer to pay taxes will also be very high. All of you will agree with my second point also? The tax burden which will fall on the customer will be very, very high. That is, if you look at the 143 rupees, if you break up 143 rupees, can I break it up like this? 100 rupee is in the step 1, plus 10 rupee is the tax, plus 20 rupee from the step 2, plus 13 rupee, that is the tax. Total will give you 143. You can calculate it. Total will give you 143. But out of this 143, have a look at this. 13 plus 10, 23 rupee is the tax burden on the customer. So whenever there's a cascading effect, 2 points are very important for you to remember. One, the market price of the product will be higher, and second, cascading effect always means tax burden on the customer will also be very high. How do you address it? How do you take care of it? That is the reason state governments came together. State governments came together, and all the states, introduced a concept of value added taxation. All the states brought in a concept called as value added taxation, right? In short, this is called as VAT system, right? The state governments, instead of sales tax, do you remember this? State governments used to impose sales tax. So instead of sales tax, the state governments introduced a new system by the name of value added taxation. And they expected that with value added taxation, there will be no cascading effect. How? How VAT system will work out? Let me prove it. Look at this very carefully. A will sell the product to B, same number. Step 1, no change. A will sell the product to B at 100 plus tax of 10%, which means B will purchase it at 100 rupee plus 10 rupee tax. 10 rupee tax, which means, listen to me very carefully now. Can I say right now, after step 1, only after step 1, observe. After step 1, can I say B, who is a manufacturer again, B has paid a tax of 10 rupee to government. Please do let me know, participate. Please participate. Step 1, I'm talking only about step 1 now. I'm talking about only this, step 1. After step 1, can I say B, who is a manufacturer, has paid a tax of 10 rupee to the government. Now let's say you are that manufacturer. You are B. Now what if government of India tells you, right? Not government of India, let's say states. What if the government tell you, whatever taxes you have paid, I will give it back to you. I will repeat the statement. The government says, whatever taxes you have paid, when you purchase the product, whatever taxes you have paid, I will give it back to you. That is, you have paid a tax of 10 rupee to the government. Government will give you the 10 rupee back. Now please tell me, if you have paid a 10 and you will get the 10 rupee back, will you transfer the tax burden of 10 rupee to the customer? Is it correct? Is it fair? Right? Yes or no? Those who are saying yes, listen to me very carefully. My dear, listen to me carefully. You have paid a tax of 10 rupees to me. I will give you the 10 rupee back. If you are paying 10 and if you are getting back 10, should you transfer the tax burden of 10 rupee to the customer? Does it make any sense to you? All of you will say no. All of you are okay with this? If you're paying 10 rupee and if you get the 10 rupee back, all of you will agree that you will not transfer it to customers. Can I go to the step number 2 now? Let me know. Can I go to the step number 2? So in the step number 2, what will happen? Observe it very carefully now. This is the beauty of value added taxation. In the step number 2, you will consider 100 rupee cost of product plus 20 rupee your profit, labor cost, etc. That is, your selling price will become 120. Your selling price will become 120. Now please tell me, is there a difference between step 2 here and a step 2 earlier slide? What is the difference? Right, again I'll move to the next slide. This is earlier without VAT system. This is with VAT system. What is the difference? In the step 2 earlier, you included the tax of 10 rupee in the selling price. Is it okay? In the earlier system, you included the tax of 10 rupee. But here, you are not including the tax of 10 rupee. Why? Because government said, whatever taxes 10 rupee you are paying to me, I will return to you. I will give it back to you. Hence, you will not include a tax of 10 rupee in the second step under VAT system. So the price will become 120. Government will impose a 10% tax on 120, and 120, 10% is 12 rupee. So 120 plus 12 rupee, the customer will pay 132 rupees for the product and purchase. Now, simple question to you people. Observe and tell me, is there a cascading effect in the step 2 in this example? I'll repeat my question. Is there a cascading effect in the step 2 in this example? Some of you are saying yes. I don't want to take the names because suddenly students will start taking it personally. My dear, what do you mean by cascading effect? Answer is no, by the way. There is no cascading effect. What is cascading effect? A tax imposed on a tax. Now, in case of step 2, right, look at step 2. Step 2, you're imposing 10% tax on 120 rupees. All of you agree? In the step 2, you're imposing 10% tax on 120. What is this 120? 120 is nothing but 100 rupee, that is the cost of raw material, and 20 rupee, which is nothing but your profit, your cost of labor, etc. So if you're imposing 10% on 120, is there tax on tax in the second step? Right, I repeat, if you're imposing 10% tax on 120, is there cascading effect? Is there tax on tax? Absolutely no. All of you are clear with this? Anybody has a problem? All of you are clear with this? So here, there is no cascading effect. This system is nothing but value added taxation. Right? This system is nothing but value added taxation. Under value added taxation, we introduce the concept of input tax credit. Input tax credit. In case of input tax credit, what will happen is, look at this. Whatever taxes you have paid on the inputs, I repeat, whatever taxes you have paid on the inputs, you will receive a credit of these taxes when you will collect, right, the goods, when you will collect the money and sell the goods to the buyer in the market. I'll explain it. Listen to me carefully. What is input tax credit? Claiming the taxes paid on the input as credit from the taxes collected when the goods or services are sold. Meaning what? Let's take the same example. I'll explain. Listen to me now. I am A. I will sell the product to you. You will pay 100 rupee plus 10 rupee tax. I will take this 10 rupee, give it to the government. All of it clear with step 1? Anybody has a doubt with step 1? I'll repeat it again. I am A, you are B. I will sell the product to you. You will pay 100 rupee plus 10 rupee tax. I will take 110. I will keep 100 with myself. I will give 10 rupees to the government. Now you will add value. That is, you will produce something using the input. You will sell it to customer at 132 rupees. You will sell it to the customer at 132, which means you are collecting 100, you are collecting 20, and you are also collecting 12 rupee from the customer. What is this 12 rupee? 12 rupees nothing but tax. All of you okay? 12 rupees nothing but tax. So you will collect a 12 rupee tax from the customer, give it to the government. Government will give you 10 rupees back. Government will simply give you 10 rupees back. This concept is called as input tax credit. Any problem with this? Right? Any problem with this? Government will simply give the credit back to you of 10 rupees. Right? This is called as value added taxation. This is how the system was implemented. And the beauty of the system is the taxes in the system will be imposed on the value addition. There is no cascading effect. Market prices would be lesser. Market prices would be lesser. Now, there is a very interesting question from one student. Sir, you said ITC. Who will get the ITC? My dear, you tell me, who do you think should get the ITC? Should A get the ITC? Has A paid any taxes from their own pocket? Simple question, by the way. Has A paid any taxes from their pocket? No. C is the customer. C is the customer. Ultimate burden of taxation will fall on C only. B has purchased input. Can I say B has purchased input, has paid a tax of 10 rupee in the step 1. So don't you think it should be B who should get ITC here? Is it okay? It is B who should get the input tax credit. And that's a basic idea. Can we go forward? Now, this was implemented at the state level, because please remember this. I'll repeat it again. Please remember this. Sales tax came under the power of state governments as per Constitution of India. And the state governments, instead of sales tax, introduced VAT system. Central government continued with the idea of a excise duty itself. Right? There's a problem with that. You'll understand in some time. So with the idea of a VAT system, with the idea of input tax credit, we expected that cascading effect would be addressed. The tax burden on the customer would fall down, and tax on tax will not be imposed in the system. But there was a problem here. Right? There was a problem. Right? Listen to this example very carefully. Please listen. Right? I don't know why many of you do not listen to what I say. You do not listen to me. Please listen to me first. Okay, what I've done here, I've divided, right? Basically, a transaction is happening. Right? There's a transaction. I've divided the transaction into 2 steps. This is step number 1. This is step number 1. This is step number 2. Listen to me very carefully now. This transaction is happening between 2 states. That is, buyers and sellers are not there in one state only. They are there in 2 states. Can I say this is interstate trade? Let me know. Can I call this as interstate trade and commerce? And whenever you talk about interstate trade and commerce, please remember this. The right to impose a taxation on interstate trade and commerce is with the central government. Is with the central government. All of you are clear with point number one? I'll repeat it. Right? A good is produced in one state. It is consumed. Consumed means used in another state. This is basically called as interstate trade and commerce. Interstate trade and commerce. Point number two, whenever you talk about interstate trade and commerce, it will be the central government which will have powers over the taxation of interstate trade and commerce. Point number three, whenever there was interstate trade and commerce, earlier central government had a tax by the name of central sales tax. All these points are important. Listen to me very carefully. Right? Whenever there was interstate trade and commerce, earlier central government had a tax by the name of central sales tax. And what was the beauty of central sales tax? The central sales tax was collected and was used by the government where the production of the good happened. Where the production of good happened. Any problem in understanding the statements? The central sales tax, no doubt, it was under the power of central government. But the collection of the central sales tax and the usage of the central sales tax was given to the state where production of the good happened. Meaning what? Let me give a very simple example. Imagine this is state 1. The good is produced in the state 1. It is transported and consumer will purchase the product in the state 2. Now please tell me, central sales tax should go to S1 or S2? Very simple question, by the way. The central sales tax should go to S1 or S2? My dear, most of you are not listening. It should go to S1. It should go to S1. Why? What did I write here? I don't know what you're listening to. I absolutely have no idea what you're listening to. I wrote where the good was produced. Correct? I've written it very clearly here. Where the good was produced. Now tell me, between S1 and S2, where is the good produced? Where is the good produced? It is produced in S1. So if the central sales tax is collected, should go to which state? It should automatically go to S1. All of you okay with this? Can I go forward? All of you okay with this? Anybody has a problem with this? Arey Baba, very difficult to understand. Okay. Let's say this product is manufactured in Uttar Pradesh. Manufactured in Uttar Pradesh. It will move across Uttar Pradesh, enter into Bihar. At least now all of you will agree this is interstate. Manufactured in Uttar Pradesh will be transported across Uttar Pradesh into Bihar. Customer is there in Bihar. Customer will purchase in Bihar. Now whatever is the central sales tax on this bottle will be given to which state government? Will be given to which state government? Uttar Pradesh government? UP government. Why? The good was manufactured in UP. Can I call this as the good originated in UP? Any problem with this? The good originated in UP. Hence, understand this very carefully. Hence, CST was referred to as origin-based tax. All of you are okay with this? Hence, central sales tax was referred to as origin-based tax. Any problem why this is referred as a origin-based tax? The tax will be given to the state where the product originated, where the product actually was produced, hence called as origin-based taxation. Remember this. Right? Because in GST, there is a different concept. We'll understand it later. Now, understand the difficulty here. Please understand the difficulty. Okay. Let's say A is me. I am there in state 1. I'll produce this bottle. I will sell it to you. You are B. Right now, based on the picture, all of you will agree? You are registered as a seller with the second state. I am registered with the first state. Any problem here? I am registered with the state government 1. You are registered with the state government 2. Can you see the border here? Let me know. Can you see the border or not? At least. Now, what is the problem? Let's start. I will sell this particular bottle to you. Let's say I'm sitting in UP, you are sitting in Bihar. Okay, any two states for that matter. Don't ask me why always UP and Bihar. Take any two states for that matter, doesn't matter. Okay, I'm sitting in UP, you are there in Bihar. I will sell the bottle to you at 100 rupees. Now, is the CST applicable on this? Is the CST applicable? Of course, yes. Central sales tax is applicable. Let's say 10% CST is applicable, which means you will pay 100 rupee plus you will pay 10 rupee central sales tax. Now, second question. The 10 rupee CST will be given to UP government or Bihar government? Of course, you have answered this already, but again, just to reconfirm it. Can I say this 10 rupee will go to UP government? It will go to UP government. Why? Origin. Now you have paid 100 plus 10. You will add a value of 20 rupee. That is a labor cost of 20 plus profit, etc. 20 rupee. You want to sell it at 130 rupees. You want to sell it at 130. The Bihar government basically says there is a VAT. There is a VAT of, let's say, 10%. A VAT of 10% tax rate is applicable. Now you will tell, that is you are the seller here, you're B. You will tell Bihar government, I've already paid a tax of 10 rupee. So give me a credit of 10 rupee. All of you will agree with me? You are a seller. You already paid a tax of 10 rupee. You will tell the Bihar government, I've already paid a tax of 10 rupee. Please give me a credit of 10. Do you think Bihar government will give you a tax credit of 10 rupee in this situation? Does it make sense to you? Think rationally. Right? Do you think Bihar government will give you a credit of 10 rupee? Answer is no. Why? Bihar government has not collected tax from you. It has gone to UP government. If Bihar government has not collected the 10 rupee tax from you, how can the Bihar government give you a tax of 10? All of you will agree with me? Anybody has a problem with this? And you cannot go to UP government because you are not registered in UP. You are registered in Bihar. Done? Because you are registered in Bihar, you are not registered in UP. UP government has taken 10 rupee. They will not give you a credit of 10. You will not get a credit of 10 rupee. Now, if you don't get the credit, that is a return of 10 rupee, don't you think you will transfer the tax burden to customer again? Correct or not? Because you are not getting a tax back of 10 rupee, will you not transfer that tax to the customer? Because ultimately customer has to pay all of these taxes. So what you will do? Please look at it. 100 rupee plus 10 rupee, the tax that you will not get, you will add 10 rupee plus 20 rupee plus, all of this will give you 130 rupee. Then the government will impose VAT of 10%. Now, can I say 10% on 130 rupee is cascading effect? Let me know. 10% on 130 rupee, is it not cascading effect? Are we not imposing tax on a tax? Right, so ultimately the tax burden will increase, cascading effect will be there, and the customer will have to pay more taxes. Which means, I'll give you a statement, please do let me know now. can I say even after VAT system, I repeat, even after VAT system, there was a cascading effect in the economy. I'll repeat the statement. Even after after the VAT system, is there a cascading effect in the economy? Answer is yes. Some of you are saying no. I don't know. Why are you saying no? I absolutely have no idea. Why no? Is there a cascading effect in the system? Of course, yes. If you're going to impose a 10% tax on 130 rupees, don't you think out of 130 rupee there is already a component of 10 rupee? Yes or no? There is already a component of 10 rupee? Yes. So if you're imposing 10% on 130, it is a tax on tax, that is cascading effect. So argument was very simple. The state governments introduced VAT system, value added taxation, wherein they started providing input tax credit to ensure that there is no cascading effect. But because of a central sales tax system, because of interstate trade and commerce, even under the VAT system, there was a cascading effect. And to address all of this, now Government of India has introduced GST to address all these issues. Compared to earlier indirect taxation system, Government of India has introduced GST, that is nothing but goods and services tax. Can we start with the GST now? Can we start with GST? Goods and services tax, GST. Anybody has a problem? Let me know. Anybody has a problem? Evolution is simple. All of this is evolution. Evolution is that earlier there was a excise duty and sales tax, cascading effect. Now what the state governments did was they replaced the sales tax with the concept of VAT system. Right? They replaced that with VAT system. And under VAT system, at every step ITC is provided to you. Right? Under VAT system, at every step ITC is provided to you in ensuring that there is no cascading effect. But despite having VAT system, later we realized that because of interstate trade and commerce, even under VAT, there is a cascading effect. Right? And that is the precise reason now we have introduced GST, goods and services tax. In fact, if you look at the VAT system, I'll prove it to you. VAT is a very, very beautiful system. Now, listen to me very carefully. Listen to me. How do you understand the importance of all of these systems? Listen to me very carefully. Step 1, in this example, look at it and start answering. Step 1, how much is the government collecting in the form of taxes? Let me know. Step 1, how much is government collecting in the form of taxes? 10 rupee. Correct? Step 2, how much is government collecting in the form of taxes? How much is government collecting in the form of taxes? In the step 2, 12 rupee. Correct? But out of this 10 and 12 rupee, I repeat, out of this 10 and 12 rupee, can I say the 10 rupee credit will be given to manufacturer B? All of you okay with this? Out of this 10 and 12, the 10 rupee will be credited, credit will be given to manufacturer B, which means effectively, how much is the tax collected by the government? Effectively, government has collected 12 rupee tax. Some of you are saying 2 rupee. My dear, 12 rupee. And how difficult is this? I don't understand. Imagine you are the government. Step 1, you will get 10 rupee. Step 2, you will get 12 rupee. You will give the 10 rupee back. Which means effectively how much money you have collected? 12 rupee. Anybody is finding this difficult? It's not at all difficult because you are confusing it everywhere. That's the reason it is difficult. You will collect a 10, you will collect a 12 and you will return 10, which means how much money you have, Baba? Right? How much money you have? You have 12 rupee. All of you are okay with this? So government effectively has collected 12. Now calculate how much is the value addition in the economy. Look at the system. How much is the value addition? Can I say step 1, 100 rupees the value addition? All of you okay with this? Step 1, 100 rupee value addition. Step 2, 20 rupee value addition. Totally how much value addition? Let me know. Step 1, 100 rupee. Step 2, 20 rupee. Total value addition is how much? And if VAT is 10%, which was there, if the tax rate is simply 10%, 10% of value addition should be how much? 12 rupee. 10% of value addition should be 12. How much was the tax collected by the government? 12 rupee. Does it make sense? Yes or no? Does it make sense? Total value addition is 120. 10% is tax, which means 12 rupees should be the tax collected by the government, right? And 12 rupees is the actual tax collected by the government. So is there cascading effect? If both the numbers were different, there should be cascading effect. But because the value addition is 120, 10% of 120 is 12, and the taxes collected are 12, there is no cascading effect. Again, this is only to just make LHS is equal to RHS. Do you remember your high school idea? LHS is equal to RHS. Right? If you have not understood it, no problem. UPSC is not going to test you to that particular extent. Okay. Now, come to the GST. Come to the concept of GST. Under GST, what are we trying to achieve? One, we want to address the issue of cascading effect. And I'll prove it to you. Have patience. I'll prove it to you how under GST cascading effect will be addressed. You'll understand. Second, earlier there were multiple indirect taxes. Central government had multiple indirect taxes. State governments had multiple indirect taxes. Now what we have done is all these indirect taxes, most of them, all these indirect taxes have been brought under only one tax, that is goods and services tax. It is easier to implement one tax compared to, let's say, 30 to 40 types of taxes. Third one, with implementation of GST, we are expecting more taxpayers to come under GST. And this has actually happened. I'll repeat it again. With implementation of GST, we expected more companies, more sellers to come under taxation network, which means, can I say, with implementation of GST, tax base will widen. Anybody has a problem with this? I'll repeat it again. With the GST, more and more companies have come under taxation bracket. More sellers, more middlemen, etc. have come into the taxation bracket, which means the tax base because of GST has widened. That is a third point. And fourth point, logistics sector, transportation cost or the logistics sector is expected to benefit because of GST. I'll explain this. Have patience. I'll explain it now only. How transportation sector will benefit? How logistics sector will benefit because of GST? Let me explain. Earlier, imagine this is one state and this is another state. State 1, state 2. You will produce the bottle in the state 1. You will load it into a truck. Truck is supposed to go to second state, supply it to somebody there. Buyer is sitting in the second state, which means you will have to cross the state border. All of you okay with this? The truck has to cross the state border. And earlier what used to happen was, at the state border, checkpost used to be there. Checkpost means a place where lorries have to stop. They will have to go to the government officials who are sitting there, submit all the documents, and then they'll be allowed to enter into second state. Checkpost. Now, as per Government of India's survey, as per Government of India's data itself, whatever time was taken for transportation, I repeat, whatever time was taken for transportation, one-fourth of the total time was actually spent at the checkpost itself. Anybody has a problem with this? Right? Around 1/4 of the total time taken for transportation was actually spent at the checkpost itself, which means imagine you will take, let's say 10 hours. You will take 10 hours to transport the good from state 1 to state 2. 1/4 of it, that is around 2.5 hours, you will have to spend at the checkpost itself. A simple question to you people: if you are spending 1/4 of the time at the checkpost, can I say overall time taken for transportation will be higher? Correct? Overall time taken for transportation will be very high. And what about cost of transportation? What about cost of transportation? Even the cost of transportation will start increasing because you have taken the truck on hire. It's not your own truck. You have taken the truck on a hire lease basis. So if they are taking more time for transportation, they will charge you more. So cost of transportation was higher. Time taken for transportation was higher. Under GST, I repeat, under GST, you do not have to stop at the checkpost now. Is it okay? You do not have to stop at the checkpost. Checkpost concept at border has been removed, which means from one state to another state, you can easily transport the goods now. Time taken will come down, right? And the cost of transportation will also come down. All of you okay with this? All of you okay? And GST will basically make it easier to conduct business. It will make it easier to conduct business. Right? So these are some of the reasons why we have introduced goods and services tax. Okay, next. Now, what are the important features of GST? First one, it will streamline or subsume all the indirect taxes. I'll repeat the statement. It will streamline or subsume. Subsume means what? All the indirect taxes. So far, around more than 40 indirect taxes and cesses. Please remember this. More than 40 types of indirect taxes and cesses have been taken and they have been put into only one tax, goods and services tax, streamlining the indirect taxation. Okay, so streamline or subsume all the indirect taxes, and as a result of this, you will have one nation, one indirect tax. Right? It will lead to one nation, one indirect tax. Okay, that is the first point. They will also use the term national market. They will also use the term national market. One nation, one indirect tax, and national market. What do you mean by national market? Please remember this. Under GST, if this product is sold in any of the states in India, GST rate shall remain same. I'll repeat it. What is national market? This product can be sold in any part of India, any state. The GST rate will be one and the same. All of you okay with this? I'm not saying market prices are one and the same. Please do not misunderstand me. I'm saying GST rate is one and the same. For example, if this bottle will attract, let's say, GST rate of 12%, in whichever part of India the bottle be sold, GST will be 12%. UP 12%, right? Jharkhand 12%, Tamil Nadu 12%, Maharashtra 12%, etc. All of you okay with this? That is called as national market. That is national market. Why this is important? Earlier, if you remember, I said VAT was imposed by the state governments. Do you remember this? Earlier I said VAT was imposed by the state governments. Please tell me, do you think VAT rate on this product will be the same in all the states? Let me know. What does your mind say? VAT was imposed by the state governments. Do you think VAT, every state government will have the same rate of VAT on this product? Absolutely no. Because different states, one state could have 5%, another 12%, another 8%, another 10%. But now under GST, it will not happen. This product, irrespective of which state, the GST rate will be the same. Right? GST rate will be only one rate that will be decided by GST Council. Point number 2, Government of India, in order to implement GST, amended the Constitution of India. I'll repeat the statement. Government of India, in order to implement GST, amended the Constitution of India. Why? What was the need for amendment to the Constitution? The Constitution has divided taxation powers between center and the state. I'll repeat the statement. The Constitution of India, under Schedule 7, polity classes are over for you. For whom it is not over, later it will come, do not panic. Under Schedule 7 of Indian Constitution, it has divided taxation powers between central government as well as state government. But now, understand this, for GST, you are taking taxation powers of the states as well as the central government. Right? Don't you think in order to do that, first we will have to amend the Constitution of India? All of you will agree with me? Anybody has a problem with this? Right? You are taking away the powers of the states as well as the central government to form only one tax. Only one tax. Which means first you will have to amend the Constitution of India. That is basically the reason why Constitution was amended. Next, there was a constitutional authority under Article 279A, very famous GST Council. There's a constitutional authority which has been set up by the government under the GST Act called as GST Council. For this, we amended the Constitution of India. Article 279A was inserted and we have GST Council, which is a constitutional body. What do you mean by constitutional body? Remember this. Again, under polity, will come across all of it. Constitutional bodies are those which are mentioned in the Constitution of India. Is it okay? Right? They are mentioned in the Constitution. Okay, constitutional bodies. Now, constituted by President of India. Who is the chairperson? Who is the chairperson of the GST Council? The Finance Minister. The Finance Minister is the chairperson of the GST Council. Finance Minister is the chairperson, that is head of the GST Council. In addition to the Finance Minister, there is also representation of the Finance Ministers of the state government. Also, there is representation from union territories with legislative assemblies. Is it okay? Right? Union territories with legislative assemblies. Right? I hope all of you will understand when I say union territories with legislative assemblies. Delhi, right? Pondicherry, right? Example. So this is the composition of the GST Council. Now, what is the role of the GST Council? What is the importance of the GST Council? GST Council will decide what goods will be brought under GST, what goods will be kept out of ambit of GST, what rate should be applicable for this product, what rate should be applicable for EX, should the rate be increased, should the rate be decreased, etc., etc. In a nutshell, coverage of the goods and services, which goods should be exempted, which goods should be included, fixing the rate of GST on the goods, etc. That is the function, that is basically the function of GST Council. Now, apart from this, I'll come to this, don't worry. Apart from this, the quorum requirement in the GST Council is 50%. What do you mean by quorum requirement? Quorum simply means what should be the minimum percentage of the people or members be present for discussion. Is it okay? I'll repeat the statement. What do you mean by quorum? Quorum means what should be the minimum percentage of members be present for discussion. In case of polity also, I'm pretty sure you have come across quorum. In Lok Sabha, what should be the quorum? In Rajya Sabha, what should be the quorum, etc. So quorum means what should be the percentage people who are present for deliberations, for discussion. So in case of GST Council, please remember it is 50%. I'm talking about GST Council only, 50%. Next, how the decision is taken in the GST Council. How the decision is taken. Please remember this. The state governments and the central government, there is a representation, correct? State government's representation is there. Central government representation is there. Central government will have 1/3 voting right, which means, can I say, 33.333% voting right is given to central government. Anybody has a problem? 1/3 voting right simply means 33.333%. And remaining two thirds is equally divided between all the states, even union territories, by the way, union territories with legislative assemblies. So remaining two-thirds, that is 66.66%, will be divided equally. Please remember that, equally between all the other representatives from the states as well as union territories. Which means remaining 66% or 66.666% will be for all the states, 33.33% will be for central government. And whenever voting is supposed to be done, that is, I'll take a very simple example here. Let's take up one example. Imagine the GST Council, there is a discussion. Should we increase the GST rate on this bottle? Very simple example. Okay. In the GST Council, there is a discussion. Should we increase the GST rate on this bottle? Some of the states will be in favor of it. Some others are remaining will be opposed to it. Now, how will you take the decision? All of you okay with this? All of you are able to understand? If everybody will agree that, okay, let's increase the GST rate, no problem. But if some states say, let's increase, others will say, no increase, let's keep it the same. Then how the decision will be taken? Please remember, voting is conducted. Voting is conducted and the decision is taken whenever we have at least 75% of present and voting on one side. Is it okay? Whenever we have at least 75% of the votes which are present and voted on one side, right? That will be how the decision making will be done in the GST Council. Okay. Now, apart from this, what kind of taxes have been subsumed? Please have a look at it. Do not worry about all these taxes. What I would recommend is try to remember 2 to 3 types of taxes this side, 2 to 3 types of taxes this side. Many of you will take the names of these taxes, start doing a thorough study on all of them. I would recommend against it. I'll repeat my statement. Many of you will simply take, for example, you'll take central excise. You'll start reading when it was introduced, what was the rate in 1990, what was the rate in 2005, what was the rate in 2014, which goods were covered under this, etc., etc., etc. And you will have sufficient data to write a thesis on all these taxes. My dear, be very careful. Why? More than 40 types of indirect taxes plus cessors are brought under GST. So question number 1, do you think any of these taxes are individually applied now? Let me know. Do you think any of these 40 types of indirect taxes and subsidies, do you think these are individually applied? These are present in the economy? Absolutely no. Only GST is there today. Only GST is there today. That's a reason. Do not do a thorough study of all of these. It's a waste of your time. I will guarantee it, it's waste of your time. Right? So simply remember 2 to 3 examples under both central government, state government. By heart it, go forward. Right? Save your time, conserve your time. Now, what are the other features of GST? We follow a model of dual GST. India follows a model of dual GST. What do you mean by dual GST? Imagine a product will attract a GST rate of 18%. This 18% is equally divided into two parts, that is 9% and 9%. This 9% will go to central government. This 9% will go to the state government where good is consumed. Understand the statement very carefully now. If the GST rate applicable is 18%, it is divided into two equal parts. Point number one. And these two equal parts, one part will go to the central government. I will call this as central GST. And another 9% will go to the state government where the good was consumed. That's very important. Where the good was consumed, I will call this as state GST. Meaning what? Let me ask you a very simple question. Let me ask you a very simple question. Here is state 1, example 1. Okay, here is state 1. A particular good was sold and consumed in the state 1. GST collected was, I'll just throw arbitrary number, was 12 rupee. Can I say out of this 6 rupee will go to central government and remaining 6 rupees will go to state government 1. Anybody has a problem with example 1? Please do let me know. Anybody has a problem with example 1? Right? It was state 1 where the good was consumed. Hence, state government 1 will collect the SGST, that is half of 12 rupee. Example 2. The production happened in state 1, but the good was consumed in the state 2. Production happened in the state 1, good was consumed in the state 2. And let's say GST collected was 36 rupees. Arbitrary. GST collected was 36 rupees. I will divide this into two equal parts, 18 rupee and 18 rupee. I'll say 18 rupee will go to the center and this 18 will go to state 2. All of you okay with this? Right, the second state where the good was consumed will take SGST, state GST. Hence, GST is also referred to as destination-based tax. Correct or not? Hence, GST is also referred to as destination-based tax. Destination-based tax means what? The state where the consumption will happen, that state will collect the state component. All of you okay with this? All of you okay with this? Anybody has a problem? Right? So whatever is the GST collected, divide that into two equal part. One half will go to the center. Remaining half will go to the state where the consumption actually takes place. Right? That is basically destination, right, based taxation, right? Origin, destination. Can you understand now? CST was origin based taxation. Why? Go back, you'll understand. GST is a destination based tax. Why? Where the state consumption happens or where consumption happens, that state will get the SGST component. Right? So what are the GST rates right now? The GST rates are 5%, 12%, 18 and 28%. These are the rates actually applicable right now. Right? There is also 0%. There is also 0%. There is also 1%. There is 5% GST also. But these are applicable in specific situations. Most of the transactions in India will either happen at 5 or 12, 18 or 28 or at 0%. Right? So these are the GST certain features. Now there is one more term, IGST. There is one more term, IGST. What is this IGST? IGST stands for integrated GST. It is written in the first line only. Please have a look at it. Right? IGST is referred to as integrated GST. What is this integrated GST? Please remember this. Whenever there is interstate trade and commerce, IGST is applied. I'll repeat the statement. Whenever there is interstate trade and commerce, IGST is applicable. Now you please tell me, in these two examples, where will you write IGST? Let me know. In these two examples, example 1 and example 2, where do you think you will write IGST? You will write IGST here. All of you okay with this? You will write IGST in the second example, and you will simply write GST in the first example. Whenever it is within the same state, production, consumption within the same state, GST. Production in one state, consumption in another state, IGST, integrated GST. Okay. There are certain goods which are exempted even today. Exempted means these are not covered under GST. These are not part of GST. For example, alcoholic liquor for human consumption. Alcoholic liquor for human consumption. Electricity, right? Who imposes taxes on alcohol? Current affairs, by the way. Who imposes tax on alcohol? Alcohol, whenever it is produced in the domestic market, it is a state government which will impose the tax. And it is very much there in the current affairs. Please be very, very careful. Right? All of you reading about Delhi? Correct or not? All of you reading about Delhi? What is happening in Delhi, etc., etc. So whenever the liquor is produced in the domestic market, the tax is imposed and collected by the state government. And whenever it is imported, I hope all of you know, liquor is also imported into India. Whenever it is imported, it is imposed by the central government. Right? Be very careful with all of this. But more importantly, alcoholic liquor for human consumption, electricity, etc., even today, they are exempted. Exempted means they are not even covered under the GST law. They are not covered under the GST law. Whereas, next one, petrol, diesel, aviation turbine fuel, etc., they are there under the GST law. Is it okay? They are already there under the GST law, but we are yet to decide what should be the GST rate on it. Is the logic okay with all of you? Petrol, diesel, ATF, they are there under the GST law. GST law is there. Under that, they are covered. But we have not yet decided what should be the rate of GST applicable on these products. Right? That is basically fuel products. That is the last but one point. Now, last point, compensation will be provided for 5 years. Compensation will be provided for 5 years. Now, what is this compensation? Right? What is this concept of a compensation? Let me explain. This will be the last point for the day. Listen to me very carefully. Imagine you are the chief minister of particular state. Be happy. 820, I'm making you chief minister. At least be happy for this. Okay, you are the chief minister of a particular state. Until now, that is before GST, you had the right to impose VAT on this bottle. Correct? Before GST, you had the right to impose a VAT on this bottle, which means according to your requirement, 1 year you could have a VAT of 6% on this. Another year you could change it to 7%. Another year you could change it to 8%. Possible? Think of it. Possible? Of course, yes. You're the chief minister. You can change the VAT rate according to your requirement. Now, what has happened? This particular VAT rate on the bottle has been covered under GST. It has gone under the GST now. Simple question. You want to increase, you alone want to increase the GST rate from 12% to 18%. Can you do it? Think of it. You alone want, or some of chief ministers, 4, 5, etc., because they want to collect more GST, they want to earn more tax revenues. You want the GST to increase from 12 to 18%. 4 or 5 people, can they do it? Answer is no. Why? GST council should decide. You do not have the power. Which means, can I say, by giving away the taxation powers, is it okay? By giving away the taxation powers, there is concern over how much revenue you will be able to generate under GST. Correct or not? Powered under GST, are you not concerned about how much revenue you are collecting under GST? Because what if, I'll just give a very simple example. What if before GST was implemented, annually on this bottle, you are able to collect 100 crore rupee VAT. Very simple example to make you understand. Before GST, annually on this bottle, you are able to collect 100 crore rupee VAT. But now it is under GST, you will get half of 12%, that is 6%, assuming the bottle will be consumed in your state. What if you end up collecting only 80 crore rupee GST from the bottle? Is it a concern for you? Yes or no? Is it not a problem for you? Of course, yes. You will argue that by giving away the taxation power, I'm losing revenue. I'm basically losing revenue because I've given away the taxation power. That is the reason under GST, which came into force from 1st July 2017. Please remember this. The GST was implemented from 1st July 2017. Government of India for 5 years. For 5 years, announced 100% revenue loss as compensation. I will tell you how revenue loss is calculated. 1 minute. Okay. 100% revenue loss will be provided in the form of compensation. In the form of compensation. So how do you calculate revenue loss? Let me show it to you. Right. Let's say hypothetically, you have collected 100 crore rupees, right, from this bottle in the form of taxes. Okay. 100 crore rupee tax revenue has been collected, right, from this particular bottle. Under GST, I'll repeat, please remember this. Under GST, we will assume that next year this will increase by 14%. Right? Which means next year under GST, on the sale of this bottle, how much GST revenue you should be collecting? 114 crore rupee. All of you okay with this? All of you okay with the calculation? I'll repeat it. Those are asking, repeat. Listen. Imagine you're the chief minister, still chief minister, okay? Right? You are selling this bottle, right? And you are able to collect a tax revenue of how much? 100 crore rupee. 100 crore rupee. Now, this bottle has been taken under GST. Right? They will cover it under GST. GST rate will be applied. According to the formula given by the government, once this bottle will be covered under the GST, your revenue from the sale of the bottle, that is your GST revenue, should increase by 14%, which means next year you should be getting GST of 114 crore rupee, right, from the sale. All of you okay with this? But what if in reality? In reality, you will end up collecting only 80 crore rupees. Under GST, what if at the end of the year, you will end up collecting only 80 crore rupees? Can I say, based on this, 34 crore rupee is your revenue loss? All of you okay? Based on this calculation, 34 crore rupee is your revenue loss. According to the formula, you were supposed to earn 114, but you ended up earning only 18 crore rupee, only 80 crore rupee, which means there is a revenue loss of 34 crore. Now, many of you will ask me, sir, what if I earn 140 crore? Instead of 114, what if I earn 140 crore? You tell me, can you call this as a revenue loss? Right? Instead of 114, as per the formula, you will get 140. Is this revenue loss? No. You have earned more. You have earned more than expected revenue. So this 34 crore rupee will be given by the central government in the form of compensation. Is it okay? This 34 crores will be given by the central government in the form of compensation. Now, next question. If the central government has to give you 34 crore, central government should have the money. That is the precise reason center imposed compensation cess. Center imposed compensation cess. Right? In 28%, there's a GST rate of 28%. So 28% luxury products are there under 28%. Cars, right? Aerated beverages, tobacco products, they are covered under 28%. So government, apart from 28%, will have to pay GST of 28%. Apart from the GST of 28%, you will also be imposed and cess you will have to pay. And the government says they will collect this compensation cess, give it to the states whenever there is a revenue loss. They will collect this compensation cess, give it to the states whenever there is a revenue loss. Right? This is basically the concept of GST compensation, which will be given for 5 years. Now look at the last point. Has it been more than 5 years since the implementation of GST? Let me know. Has it been more than 5 years since the implementation of GST? Of course, yes. Right? You can sit and calculate. You will come to know it is more than 5 years. Which means, do you think Government of India today is giving compensation to the states? Let me know. Do you think Government of India is paying compensation states? No. No, Government of India is not paying any compensation states post June 2022. Calculate 5 years, you'll understand June 2022 was basically 5 years. After June 2022, center is not providing any compensation to the states because 5-year duration is over. However, last point, however, central government is still imposing compensation cess. I repeat, however, center is still imposing compensation cess. How? Why? Right? Why? Even after 5 years, if the center is not going to pay compensation to the states, why is the center imposing cess here? Reason is that during pandemic, I repeat, during pandemic, the amount of compensation cess that was collected by the center was lesser than revenue loss incurred by the states. All of you okay with this point? I'll repeat it. During pandemic, the central government collected compensation cess, but it was a lesser than the revenue loss incurred by the state, which means imagine the revenue loss incurred is, right, I'll just throw arbitrary number, let's say 200 crore, that's a revenue loss. But the center has collected cess of, let's say 50 crore rupees. That is a compensation cess. Don't you think there's a shortfall here? To pay compensation, center doesn't have sufficient money. For this purpose, central government borrowed. All of you okay with this? Central government borrowed from the market. Now somebody has to repay the loan. That is the reason central government, despite stopping the compensation to the states, is continuing collection of a cess to repay the borrowed amount that they have done during pandemic. Right? So these are certain very important points regarding the GST, features of GST, compensation cess, etc., etc. Okay. So let me stop the discussion today here. Tomorrow we'll continue from right the next point, that is right, basically why do we have multiple rates of GST. But before that, if there are any questions, please do let me know. So when will the compensation cess be revoked? I believe Government of India has decided 2026. 2026 as the year when the compensation cess collection will be stopped. Okay. Is the compensation cess is collected even now? Yes, because I've told you during pandemic cess collection was lesser, revenue loss was higher. Hence, the central government borrowed money to pay revenue losses incurred by the states. Right? That is the reason government is collecting more compensation, or even today is collecting cess to repay right the borrowings. Difference between CST and excise, my dear, central sales tax is applicable whenever there is interstate trade and commerce. Excise is applicable whenever production happens, right? And that is imposed by the central government. In case of IGST, what happens with producing state? Tax revenue as GST is given to consuming state. In case of GST, please remember the SGST component will always go to consumption state. But please understand my point carefully. Many of you are assuming, because GST is a destination based tax, many of you are assuming state government will always lose. That is, your assumption is S1 will always lose money. Please tell me, does it make any sense? Do you think always whatever is produced in S1 will be sold out of S1? You please think of it. Whatever is produced in S1 will always be sold out of S1. Does it make sense? No. And in the same way, can I say something that is produced in S3 can be sold in S1 also? Possible or not? Something that is produced in S2 can be sold in S1 also. So S1 will also get SGST. Based on only one example, do not come to a conclusion. Okay. But CGST and SGST always written in bill of petrol pump. Why it's so, sir? Please check. Please check. Right, petrol and diesel, they are not having any GST rate right now. Okay. Revenue loss. Arey Papa. Again, don't worry about calculation. There is a formula as per which Government of India says under GST, your revenue should increase by 14% from 1 year to the next year. Very simple. As per Government of India's formula, from 1 year to the next year, the revenue under GST should increase by 14%. Imagine as per the formula, you should get 180 crore GST this year as per the formula. But what if, right, you don't get 180 crore, you will get, let's say, 110 crore. This is nothing but revenue shortfall, revenue loss. That 70 crore will be paid by the central government. What is substance over form? The arrangement doesn't have any commercial importance. It is done in order to avoid taxes. GDP calculated on market price or GVA? My dear, GDP is on market prices. What is the rate of tax for compensation assessed by the government? It is not same. It is not same. From one product to another product, it will change. 14% rate is fixed? Yes. According to the formula, it is always 14%. Compensation says, okay, done. What is difference between perfectly? Don't worry about all of it. What is UTGST? Union territories. Union territories are part of GST, right? So even in union territories, when the product is sold, UTGST is applied. Okay. Fuel products are under GST and GST rates not yet decided, then how there is a difference in rates of petrol among the states? My dear, one state to another state, don't you think the state government will impose different taxes? From one state to another state, different taxes are imposed. Transportation cost is there. So the rates will obviously vary. Okay. Which GST is used? Which GST is used for horizontal distribution by Finance Commission? CGST. CGST is used. Okay. Online selling tax is different. No, GST is applicable there also because it's a service. Online trade and commerce is a service. So GST is applicable. Okay. Why petrol is so expensive? My dear, yesterday we have discussed this. Yesterday only we have discussed why petrol is so expensive in India. Yesterday only. If you don't trust me, look at the recorded video, you'll get it. Okay. Done. So let me stop the discussion today here. tomorrow we'll start from this particular point. That is, why do we have multiple rates under GST? We'll start from this particular point. Okay. So take care. See you tomorrow. Good night. Again, remember, please read newspapers, update current affairs, revise. Right? Take care. See you tomorrow.